Good morning, y'all. We're gonna start in about 5 minutes. All right. Good morning, everybody. So yeah, if you could let me know in the chat if you could hear me. It's been a pretty interesting week, huh? We're about to go through some of the stuff that we've been talking about. Remember, just of course to start off with what has occurred, and then like what we have been calling for. We've been calling for lower yields and bullish bonds, which sends DXY, or it should send DXY lower, and then send the indices higher. Indices have been going higher but the DXY has kind of been going against the relationship that the bonds and yields have. But nonetheless, right, we could see how the 2-day order block and the bearish sentiment for the yields is staying intact, right? So I favor more that DXY is going to try to get in line potentially. But yeah, so far we've had this big retracement or small retracement, right? Like a regular retracement from the high. There was SMT at the highs, which we'll dig into a little bit in a little while. We have this fair value gap. We do have this lower fair value gap. It seems like price is gonna maybe reach for. Again, if you've been here coming to these live calls, you'll remember how we validate and invalidate potential structure, and that has to do with 3 PD arrays. So if you count, we have 1, 2. Where's the third PD array? The third PD array would be at this low, right? So until price breaks and shows significant downside momentum or sentiment by breaking through at least 3 PD arrays to the downside, we'll continue to trust the fact that price may want to just retrace to go higher, right? DXY though is definitely promoting the idea that this is going to go lower. We do have the correlation between the bonds and yields, which is something we heavily use to validate or invalidate potential bias, is not fully intact with that relationship that we're used to seeing. So there's a crack in correlation in terms of risk on and risk off relationships. So yeah, can y'all hear me in the chat? All right, for sure. All right. But yeah, so let's just take a bigger look at the yields. Looks like, as we've been pointing out the last couple of weeks, we have these relative equal lows here. Not only that, we have this failure to get down below that low. And then I believe this is on the weekly chart. Not a weekly, 3-day. Yeah, so it's a 3-day fair value gap below equal lows. So in my opinion, that's pretty high probability to be the draw. And we could see how prices come up and respected this order block here. Hasn't done anything to promote the idea that this is not going to hold. It in fact is seeming like it's going to hold, and then potentially seek this fair value gap. And then we'll see what it does from there. We don't have to know exactly where price is going to go for months in advance. Of course, that's helpful, and we do a pretty good job of that typically, but it's not something that's mandatory. Near term, for anyone trying to solidify bias, you only need to know what it's going to do either the rest of the week or day to day, at least know how to navigate the liquidity. And that doesn't technically mean you have to know overall bias 100%. You just have to have navigation and clarity in navigation, which, as I've stated multiple times in these live calls, that that's the goal, is to get you clarity, and then you can fulfill profitability if that's something you eventually end up doing. The first stage is clarity and being organized and knowing what you're doing, right? And I hope the last couple of live calls have provided y'all value, and I hope this one does as well, right? But yeah, so again, we look at things from this daily chart. It seems to me like price is going to want to continue to go lower here. We could see how the whole week has been a little bit rough in terms of the yield's ability to be one-sided. Looks like, again, very logical target is going to be down here, right? Because there's equal lows. There's a failure to get down below that, so there's a ton of liquidity there. So whoever is in this sell is basically kicking the crap out of the market, right? They're beating it down. So I'm assuming that when we get down into this area, that's where we can anticipate maybe price coming back to seek a fair value gap like this one. But again, you have to consider that this order block was also respected on that 2-day and 3-day time frame, right? So again, the opinion is price and the yield should drop lower, right, to reach down to this fair value gap. So let's take that and go look at the bonds. Right, so if we think that the yields are going to go lower, then obviously, since this one's reverse correlated, typically price is most likely to reach up for its fair value gap above equal highs, right? So it all links together, you know what I mean? So with that being said, bonds and yields relationship being understood, we want to consider the fact that the DXY may just have ran this high to then turn around. We'll see if that's the case. And then obviously for the indices, if we can get all three of those. Right, obviously in the indices, prices basically wanted to retrace bearish. There was SMT at the highs, right? So price came off of the highs. Looking at the the overall relationships in the bonds and yields, it does not signify that this is going to be a full-on potential bearish move, right? When does this fully become bearish sentiment? Well, again, you want to look at the 3 PD arrays, right, as we talk about all the time, right, in terms of validation and invalidation. And then you get a pretty clear picture, and you could continue to trust the fact that, you know, price is going to continue going higher. But yeah, so it's Friday. We came off the holiday, right? It's a holiday week. Yesterday with my private community, we called out this retracement. It's not unreasonable for this retracement to have occurred because it went into a Thursday after being bullish. Thursday, Friday has a high chance of creating a potential retracement, 20 to 30% back into the weekly range, especially when a higher time frame PD array is met, right? So if you see like a high getting taken moving into Thursday and it's been one-sided, in this case bullish, it's not unreasonable, even if we're in a bullish market still on the higher time frame, it's not unreasonable for them to want to retrace 20 to 30% and reach for a particular internal range liquidity, right? If they've taken external, they'll seek internal liquidity, which is fair value gaps. If it was an order block, it'd be an order block. Swing low, right, inside this range. All that's internal. So then once it takes out the external, comes back, seeks internal, then it's not unreasonable if everything stays in line with this bullish sentiment, like in terms of the bonds going higher and the yields going lower, then this should be eventually triggering us to continue going higher. What invalidates that? Like I said, the 3 PD arrays below price is basically pretty much what we need to pay attention to, right? But price has pretty much fulfilled the full fair value gap here, hasn't fulfilled the full fair value gap here. Maybe it's going to leave that open. We have news at 6:45, so we will be considering what occurs around that time. Should be something exciting, hopefully, right? But yeah. Yeah, guys, if you get value from these live streams and the videos I post and stuff like that, definitely consider liking the video. I appreciate it. It really helps the channel get pushed out to more people, right? So, but yeah, with that being said, we have this fair value gap here, right? So if price does want to show significant signals pushing us higher, price is most likely reaching, obviously, to this fair value gap. Overall, the whole delivery we've seen is just a retracement back into the weekly range, right? So we've taken buy side here on the Dow. Maybe that's going to give us continued strength, right? And pull us back to reality instead of being so cracked in correlation. Like, because these two were really, really bullish. and we got the Dow that had that SMT, the smashed price lower, right? So maybe we'll kick back in. But again, 3 PD arrays below price invalidates the higher run. Same with this, right? So if it breaks this fair value gap, breaks outside of this, because this is technically a breaker here, this up candle. This is technically a breaker. So if price can't stay above the midpoint of that, if it breaks through this fair value gap and it swings through this low, then that's 3 PD arrays, and then we're likely to seek this trendline liquidity. And then if that's to take place, we want to make sure that we also validate by seeing DXY continue to go higher. And then in turn, we'd like to see, obviously, the bonds and yields support that idea as well. But if this continues going higher and the yields continue to go lower, which they most likely will, then that should send DXY lower in some capacity, right? But the DXY is obviously, from what we understand about intermarket relationships and analyzing the bonds and yields, it looks like it's cracked its correlation for whatever reason. And it could be because we have rolled over into the new quarter, right? For those of you that don't know, we are now in quarter 3. The rollover was on the 16th or 17th. So yeah, around the rollovers, right? Around the beginning portions, like the first week of a new quarter, it's generally low probability. That plus you add the fact that there was a holiday that kind of merged with that whole scenario. You know, if you've been struggling, that's pretty much why, right? Or if it's been hard to read, that's pretty much why, right? So yeah, let's see what's happening. So we got this order block here we can observe. Just keep tabs on some important levels. So we got this wick. Okay, so as price pushes higher, if it does continue to go higher, right, and maybe the bonds and yields turn around, right, and start promoting bullishness. If that's the case, then we have this wick, right, the quarters of this wick. Each quarter point is a target. As you can see, we've pretty much almost got to that one, right? The first portion, we got the midpoint, and then we got the 75%, right? So when price, you know, if it proves that it wants to continue going higher, we have also the equal highs here. One thing I also want to point out, for those of you that were here or have been here the last couple of live calls, I called this as a market maker buy scenario, right? If you've been here, you remember me calling that. And obviously things have been falling in line, right? I'm curious because of what the bonds and yields are doing. I'm curious to see whether this fails to continue to deliver higher or not. But obviously that remains to be seen. Again, you want to realize that the times we are in, if you have been struggling, if you have been having a very hard time, you can't beat yourself up because, like ICT has said the last 3 years, we have been engaging and experiencing the hardest trading conditions that ICT himself has even seen, right? Obviously, if you spend enough time here, you see that the difficulty doesn't even matter because we figure it out regardless. But as a new trader trying to figure out what the hell is going on, you need to realize that the current conditions demand of you to truly follow the risk management protocols, right? And be very disciplined. Don't overtrade. Don't look to get rich tomorrow. Don't over leverage. And if you keep that in mind and you never breach those rules or those schools of thought, you will have a whole lot better time. You may not win as much as you want just yet, right? But that's typical if you're a new trader, right? You spend enough time here, clearly, those of you that have, and those of you that are in my private community, you see the difficulty isn't really much, right? Doesn't mean we're perfect, right? But we do what we have to do. And we're pretty prosperous over here. But yeah, so, you know, coming back to the market maker buy model, if this does want to continue being the market maker buy model that it looks like, then obviously we should get pretty fast delivery going from this area, because this would be first stage accumulation, second stage accumulation, smart money reversal, first stage distribution, and then this should be possibly the second stage distribution to then attempt to get us up above this high here, right? But what's along the way, right? Because that high is pretty far away. What is along the way towards that high? Well, we have, again, the quarters of that large wick we pointed out. Then we also have the fair value gap here, right? And then we also, even to this very moment, still have this swing high that a ton of liquidity is at, because obviously that was the start of this down move. So I wouldn't be surprised if they try to push it up above there. And again, we have that order block shown from that other time frame, I believe right here. All right, so we have this order block here. So we want to see what that is going to turn into, right? All right, so yeah, this is kind of the view in terms of what I think about DXY, what I think about the yields, right? So now let's first, before I move on, does the sentiment in the DXY make sense to you guys? Let me know in the chat, because I don't want to just fly through things and have y'all be lost, you know what I mean? But yeah, let me know in the chat real quick and we'll move on. Well, okay, so moving on to the indices, right? So if we look at what has transpired across the indices, clearly the Dow is the weaker of all of them, you know what I mean? So depending on what the bonds and yields choose to do, if they're going to continue showing what we see here, right, it's going to continue to drag the indices higher, and then eventually the DXY will turn around and tank. I want to see what happens here with this. If it sweeps this high like it has done, and then just starts aggressively trying to purge sell side, and then breaks through this, we look at the 3 PD arrays. If the midpoint of this order block is completely disrespected, right, and then if that starts to fall in line with the bonds and yields, then we may see this bullish trend end fairly quickly, and then obviously this market maker buy model would then start becoming invalid, right? But until something like that occurs, we stick to what we're looking at, right? The DXY looks like it wants to continue to run higher. Looks like this is a beautiful setup for a market maker buy scenario, right? So because that's the case, and it has been delivering, and we have called this way ahead of time from the last couple calls, we need to see the validation principles in effect, right? That's the 3 PD arrays, right? What are the 3 PD arrays down below? I'll let you go fully mark them off in your chart. And again, along the way, right, as we do this call today might be a longer call, right? Because, hey, what's up, Maddie? Appreciate you hopping on, brother. Appreciate you hopping on for sure. Shit, what was I saying? Well, anyways, right? We got to make sure that we pay attention to these 3 PD arrays. And again, I want you guys to go mark them off. Every single time we get on the chart, if we have a bias, make sure that you're doing that type of drill. Mark off the 3 PD arrays above and below where price is currently at. No, it's okay. It's okay, Maddie. I appreciate you, brother. No worries. You don't got to apologize. But yeah, so yeah, whenever we hop on or whenever you're by yourself, keep in mind the 3 PD array rule. It seems very simplistic. It seems like, that's a very simple way to look at things. But you'd be surprised at a lot of the things you overcomplicate as a trader, how simple you can turn them into, right? We want to believe that it's complicated and overly, dramatic in terms of what's required. But in reality, it's really not. Like my whole system is pretty simple. It has a couple different pieces, but it's not rocket science. And there's certain things that validate or invalidate. And one of those processes that I employ, that I share with my students, is that 3 PD array rule, which obviously came directly from what I've learned, So yeah, with that being said, let's move a little quicker to the indices. So yeah, we've basically taken out the highs here. We have this fair value gap. Prices retraced. What invalidates this bullish move, right? The bullish trend. Well, we got to see again the change in the yields in the bonds, which I don't think is going to happen, at least until we get to this fair value gap up here, right? Which is this higher time frame fair value gap, right? Once we get up there, then we start to, we have to chill out and wait and see what's going to happen. But again, so far, everything looks like it's in line with that narrative. Lower yields, higher bonds, which should eventually lead to lower DXY and continued higher indices. So that's what we're going to bank on. Again, going back to what validates or invalidates that potential idea, right? This fair value gap, this fair value gap, and this swing low. If those all get smashed through and there's no respect to them, clearly we're incorrect, and then we have a chance to maneuver ourselves into the other side of things and trust it, especially if we continuously use this 3 PD array rule on a day-to-day basis, week-to-week basis, and even a month-to-month basis. All right, higher time frame bias, as I've stated before, does not change dramatically. Well, higher time frame narrative, I should say. Bias on a day-to-day basis, because of retracements and price seeking, internal liquidity, then goes to external liquidity, right? That whole ebb and flow on a day-to-day basis for intraday trading sometimes changes the bias short term. But it's very, very important that when you're on the higher time frame and you start focusing on the narrative and trust and believe the fact that doesn't change dramatically every day, right? And you have to, obviously, within that narrative that you come up with, have to learn how to navigate the lower time frame, intraday time frames, and liquidity, which is something that I heavily teach about in my private community, and of course, here as well. So yeah, I appreciate you guys hopping on. There's so many people on YouTube. For y'all to spend time with me, I truly appreciate it. Because I just want to see y'all win. But yeah, so before we move forward too quickly, if you guys have any questions, we do have news at 6:45. So around that 6:30 open is when we'll start really doing heavily trying to look for possible opportunities and also going into the silver bullet. But yeah, I want to know, do you guys have any questions? Have you experienced anything this week that's alarmed you? Maybe there's an experience, maybe you learned something, right? Definitely let me know in the comments so that we can have a little dialogue before we start going headfirst into the open, right? Maybe you got questions about what I've talked about so far. Maybe there's questions about, something that we've talked about before, whatever the case may be. And if not, right, you can also say so, and then we can just move past questions. Once the open occurs, we're going to focus on price delivery, which is why I'm basically stating this right now. Obviously, for obvious reasons, right? We got to focus on what price is doing, and we can't get sidetracked, right? So yeah, if y'all have any questions before 6:30, definitely leave them in the comments, and I'll be happy to answer them. So yeah. All right, let's take a look. How do you shift from your higher time frame analysis into your intraday bias? For example, yesterday was bearish, but higher time frame is still bullish. So it's a wonderful question. So that has to do obviously with what price's narrative is doing. The overall bias on the higher time frame is still bullish because nothing has changed in terms of the PD arrays and the delivery and price structure as well. But like I said a second ago, in a bullish trend, there's going to be bearish moves, right? In a bearish trend, there's going to be bullish moves. Generally, in a bullish trend, the bearish moves are going to be retracements seeking PD arrays or internal range liquidity within that range of that bullish move. So you have to make sure that you're realizing, even when you're on the lower time frame, what is this bearish move doing, right? If we've been bullish, what is the bearishness providing us with, right? In this case, the bearishness was presented with an SMT at the highs. Because we're still bullish and none of our validation points for bullishness has been disrespected, we look at all retracements just as retracements seeking a PD array, right, opposed to our bias. In this case, it seeked a bearish or a bullish PD array, right? So it hit the high, SMT retraced inside the bullish move. So we're able to navigate that by understanding what PD arrays are around, right? And if you're having a hard time maybe timing moves, obviously you want to make sure you're inside of a macro or a kill zone. But if we're inside of a scenario like this where it's retraced and it's been bullish, you want to pay attention to what we are doing on the higher time frame and look at price in terms of trying to frame an engagement when you clearly see prices inside of a PD array like this, right? Because if it's bearish and it doesn't hit a PD array, it hasn't done its work completely, right? Because if we're in a bullish trend and you see a bearish move, it's literally just retracing for some form of a PD array, right? So when it hits that PD array, if you're a trend trader and you don't like counter trend trading, then that's when you start considering inside of a kill zone, inside of a macro, considering, possibly getting back in line with things. Obviously, if it shows that it wants to kick back in line with the higher time frame narrative. Does that make sense, Maddie? And it's okay if you got into a long yesterday and missed the larger move. The goal isn't to get maximum targets. The goal is to be profitable and consistent. And if that means you have to take 5-10 points because that's where your consistency is, that's where the lowest stress is, and that's where you feel you can actually have green days, then you stick to that until you get more comfortable, right? Slow and steady, anyone that tries to go 1,000 miles an hour is like being in traffic and trying to put their foot to the gas, right? Even if there's traffic, right? Every day we get into the market, there's traffic going on, right? So if we're trying to fly 100 miles an hour, the people that are going slow, organized, and are very calculated are going to be the ones that prosper, and the ones that are aiming for reasonable targets, those will be the ones that will prosper over the people that try to gain thousands and thousands of points or hundreds of points or way too many points in each day, right? Especially being new, right? I think I was gun shy from trying a short and got chopped. Yeah, so it seems like you took a couple of trades, so I hope that you remember the rules that I tell all my students and you guys as well on YouTube. You only should be trading 1 to 2 trades a day. If you take a loss, drop your risk by half, right? And then if you take another loss, you stop for the day, right? And if you take another loss, the next day you drop your risk even more until it's at the lowest possible risk until you can get back in the groove of things. The point of this isn't to drop the risk just because. You're dropping the risk for one, to even out your equity curve so you don't have a crazy sporadic equity curve that looks like this, right? But instead it looks like this, right? but that only comes from you dropping your risk and being calm and not over trading, not over leveraging. And also, dropping your risk does something for you psychologically. The damage isn't as painful, your account's not hurt as much, and you give yourself time. This is the most important, okay? Most important factor with this. It gives you time to kick yourself back in line with consistency, okay? If you don't drop your risk and you're risking 1, 1, 1, 1, 1, think about it. How much buffer zone are you giving yourself, both mentally and financially? You're giving yourself 0. You know what I mean? And you're just allowing the stack up of negative trades without allowing yourself to have enough time to get more comfortable, right? And get back in line and truly see, is my bias or narrative correct or not? If you're not doing that and you're just getting continuous damage while you're trying to figure all this out, you can just imagine how much more stressful it is and how much harder it is for you to realize the mistakes you're making versus being overpowered by, the fact that you're just hemorrhaging money, right? While you're trying to figure it out. You're more focused on the money and what you're losing at that point rather than what you need to do to improve and how you can get back in line. So it's a paradigm shift and a mindset shift. And a main concern that a lot of people give me when it comes to dropping your risk by half, they say, oh, it's going to take longer for me to make it back. Okay, that is true, potentially, right? But if you're consistent, it won't take you that long, right? So it's the area in terms of experience, right? Or where you're at in terms of experience is what makes that comment. Oh, it's going to take forever. No, it won't take you forever if you're at the point where you know what you're doing, right? Otherwise, right, if you disregard that, it's going to be painful and it's going to take longer and you're going to put more damage on yourself, right? And you have to learn that over time, painfully, right? So you might as well just start applying it now. And then once you are consistent and you get your confidence back after a losing streak, you will thank yourself more that you approached it in this way because you'll have longevity. You'll last. Like, that's the only reason that I'm able to still be here. Okay. When 90% of people I started trading with, maybe more, 95% of people I started trading with don't even trade no more. I wonder what the difference is, right? It's because I approached it in the manner in which it was supposed to be approached still to this very day, and others were trying to get rich quick and press the issue fast, and when they didn't make money, they blew their account and weren't being disciplined, they got pissed off and thought that this just doesn't work. When in reality, it was them that weren't doing the right things, that weren't taking good advice, and had their own opinions of how this should be done, right? So, you learn those lessons very painfully, and many can't, they haven't been able to take it, and it's unfortunate, right? But again, trading's for everybody, right? It is absolutely for everybody, but some people just are not, they're not reasonable when it comes to what's actually required, right? And or they're just not willing to make that sacrifice, or they're just not willing or able to deal with the pain that comes with this. And so you're a special person if you get into the market, even in the early stages, and get completely destroyed, and still have faith in yourself, still have faith in the market, and you can focus on continuously growing even when things look bleak, right? But little do you know, through every loss, you're adding another brick to that experience, and you're also callousing your mind. And if you callous your mind through experiencing losses while not being deterred and continuing to improve yourself, you'll be amazed at where you are in six months, right? And then of course even a year, or the rest of the years that come, you'll start to be truly amazed at the trader you become and the person it turns you into. You'll be a whole lot more resilient. And if you spend time here with me and some of my students, you see people change, right? You see them start to change for the better because we focus on the right things and what's supposed to be focused on, rather than how much money can my mentor make or how much money can I make maximum in a day, right? There's more to it, so it takes time. But make sure, right? Because it seems like, again, you took a couple of trades and you took a loss. Make sure you keep this in mind in terms of perspective about risk management, right? If you take one loss, that full risk percentage that you use, doesn't matter what amount, right? You have to pick your risk appetite. But if you take a loss, the next trade has to be dropped by half. Then if you take another loss, right, you stop for the day. Give yourself 24 hours and reflect on what has happened in price. Watch what occurred. Think of the 3 PD arrays. Look at the intermarket relationships and truly gain insights as far as what's occurring and whether you were correct on your assumptions or not, and then try to figure out why. And that obviously can come back to intermarket relationships, fundamental analysis, 3 PD array rule, right, so on and so forth. And you'll get a pretty clear depiction in terms of why things went wrong and how you could have acted differently. Right? But if you're pissed off and over trading and over leveraging, you're not going to think rationally like what I just said. You'll be pissed off that you took a loss and then start hating trading and spiral into the nonsense mindset. And it's unnecessary. It's overly stressful. And right, there's better ways to do things. So yeah, don't forget that, okay, Maddie? Right, so and if you have any extra questions about risk management, I'm always available on my Instagram, right? And you can just DM me there, or obviously in the comments here. But yeah, so only one trade yesterday, one trade, one win. Oh, nice. But I have trying to short on previous days. I was too far ahead of the real move. See, so that's a very interesting thing too. I was too far ahead of the real move. In my private community, we actually discussed something like that in terms of thinking that we've missed the whole move. We got into a pretty interesting conversation. My boy Byron, that you guys see in the chat here, we had a discussion about that. There's so many moves, right? And we could get into like alternative entries and different things like that on a later day. But yeah, so it's 6 o'clock now, right? So we will kind of discuss, or let's see what we can point out of significance. So again, prices came off the highs here, right? And if you look at obviously the high here to here, that's SMT still, just like it was SMT here, providing weakness. So again, we'll see what occurs with price retracing here. Like I said, in terms of timing and trying to get back in line with the higher time frame bias and navigating higher time frame to lower time frame, again, you want to make sure you know what's happening on this higher time frame. If price makes a fractal high like it has here, or it's beginning to, the next 1 or 2 days can generally be looked at on the daily chart as a possible retracement to reach for something like this, right? So a fractal high forms, it formed here, right? And so the next 2 days have been bearish. It did punch above the highs, right? So it sometimes does that, obviously. There was a holiday and, a bunch of other things that are going on. But it basically pierced the high. Now we're creating another fractal high. So it's not unreasonable for price to have the next 1 or 2 days look to retrace. Similar thing occurs when there's a swing low, right? The next 1 or 2 days after the swing low is formed. So after this candle, we can anticipate the next 2 days to be bullish. And obviously that occurred. Sometimes it doesn't work, but the bias, right? The bias is what it is. It's been bullish. So you don't put tremendous amount of faith in the fact that it's going to sell off. And this low already hit the fair value gap, right? So it's already fulfilled its job. Similar to here, it's already basically dug into this. Now, whether it wants to come down to a discount from this low to that high, which would be in line with the fair value gap right there, which is at a discount, it may want to do that. And that does not negate the bullish bias, right? Unless 3 PD arrays are broken, unless we see changes in the bonds and yields, right? But if changes don't occur and things stay as they are, then this should continue to go higher. If the bonds and yields, though, right, if things change, like if this goes down, hits this fair value gap, and then rallies, then that may lead us to seeing a change in our overall sentiment for the DXY and the indices, which would turn us bearish, and then see DXY continue to be bullish. But again, not enough evidence has been shown aside from the DXY's price delivery and the fact that this may be a market maker buy model, right? With those being the only factors, right, and us having not much underlying like layering effects for validation, I'd like to wait to fully trust that this is going to continue to go higher and that this is going to go lower, right? I would have to see something change in the bonds and yields. Because like I've said before, I mention the bonds and yields every single call, and you may wonder why I do that. Well, they're that important. Bonds and yields and understanding the relationship that has, if you're trying to have bias that you can trust, that's not just off a will or like a whim, right? And just, oh, higher highs, higher lows. Like this is one of those intermarket relationships that is so vitally valuable, right? It just boggles the mind, right? And if you start paying attention to these, you'll see it for yourself. You don't got to take my word for it, right? The more you hop on these calls, the more you'll see it, right? So you maybe you don't want to look at it on your own, right? Well, again, the more time you spend here, the more you'll see some of the process in terms of how we approach the markets and how we're able to be consistent. Because almost every live call that we've done has been pretty on point. There's been multiple setups, and they've made sense. And when things didn't make sense, or if stuff was low probability, that's also been mentioned. That's also a key observation, right? That you definitely want to mark off and journal about when it is touched on. Like right now, right? The yields and the bonds are consolidating, right? So that could lead us to some shakiness in terms of the cleanliness of delivery for today's price action. That's not for sure, right? But from what we see currently, which is the whole reason why we're waiting till 6:45, what we see currently, there's consolidation and it's not one-sided. But we can see what the overall narrative should play out and be, which in this case is bearishness for the yields, bullishness for the bonds, which should lead to this continuing to maybe start attacking sell side, and then we could see the indices fall in line with this bullish run here to then continue to possibly attack previous day's high, right, or just attack the wick here, right? Maybe it doesn't deliver aggressively. I'm assuming that if everything falls in line with what we've talked about, this will continue and try to attack the highs to finish out the week, right? If not, if we stay consolidating and nothing really happens, we run the risk of this retracing or just not doing much at all, right? But again, there's news at 6:45, so that is what we are waiting for, right? So yeah, if you guys been getting some value from the video, definitely don't forget to like, comment, and subscribe. Definitely leave again in the comments a question or any concerns or experiences that you've had that you feel like you want to share. I definitely like hearing from you guys and what your experiences are, what your difficulties are, because it helps guide the things that I talk about in terms of like what topics I should be focused on, helping you with, right? Because that's why I'm here. I'm here to help y'all. But yeah, so hey, what's up, brother? How are you, man? Good morning to you as well. Appreciate you hopping on. Yeah, so let's go see what the weekly's doing. So on this weekly chart, we could see that a large fair value gap is forming. So yeah, after this week, this fair value gap's not really going to have any importance until probably next week. Because if we close like this, then there's a fair value gap there. So I'd be really interested in seeing something like this occur. If the week closes like this, bullish like this, the next week, in my opinion, especially if we create a fractal high here and it stays this way, I'm pretty confident that we would end up reaching down lower into this fair value gap. Because this fair value gap on the daily, right? It's right in line with a weekly fair value gap down below, right? So again, that's why I said the 3 PD array rule. I mean, if we did retrace down to here, right, it may be giving us signals that it's not going to be as bullish, but again, it's still in line. If you go to the weekly, we are still in line with price continuing to go higher. Again, that's why when we're justifying potential bias, we have to use these other underlying things, not just what we see in the chart. What we see in the chart has to be validated in some way, right? And part of that has to do with, like I said, intermarket relationships, seasonality, for example, COT, right? And then the interest rates, right? That little list of things can literally be your full-on fundamental analysis and possible validation and invalidation tools for particular bias. And then, of course, you use a 3 PD array rule, and then boom, right? Just takes practice after that and muscle memory, right? But yeah, you want to mark off this. Maybe not. Maybe it won't get used for today. Maybe it will. Who knows? But this fair value gap could be significant, right? The fair value gap level here may be significant. And again, if we close outside of that today, next week would be pretty interesting to maybe drop down below into that fair value gap. But yeah, until that occurs, we want to observe how this is going to respect or not respect this fair value gap. We have a gap here too. It's a new week opening gap. New week opening gap there. So we'll see how that responds. So yeah, we're pretty much just waiting to see what occurs with the open price. Right, so now let's kind of dig down into some lower time frames, get a better lay of the land in terms of what is present. So I see these equal lows here right away, instantaneously. That stands out to me, pretty significant. Again, that's in line with us reaching down for that lower fair value gap. So again, that may happen. Right, we've come off the high. We've completed a market maker sell model, which I called out in my private community. The market maker sell model delivered absolutely phenomenally, and we were able to participate in that. Right, did show an entry yesterday on my Instagram, kind of stating that. But yeah, this was the whole narrative behind the sell-off that you saw. The entry that I posted, it was based on a market maker sell model, based on Thursday reversal principles, based on SMT at the highs, and just getting in line with that. Right. So we do got equal highs here. Again, we are basically creating a fractal high, and now we're basically retracing. We fulfilled this fair value gap, which was the target from the market maker sell model we participated in. So that's basically been fully fulfilled. And then again, we have this lower fair value gap down there. It seems that it may play a significant role. What else? So this is a swing low here. So I'd like to see what the response is going to be from this fair value gap. Just mark that off. So let's go see. So yeah, if we are going to dig lower, if it does prove that it wants to dig lower, then this here will be a YouTube model for the sell to go lower into that fair value gap. Right. Again, if the bonds and yields stay consolidating as they are, it's going to be a harder read to validate for either side, right? Because we've been obviously really bullish. We did call the Thursday reversal. But now, where price is at, it has to make a decision. It has to either bounce through this fair value gap, right? Which if it is going to continue being bullish, we want to see no further run lower if that's what we're going to respect for the day. If it is going to bounce higher and it is going to attack the highs continuously, we're going to have to see shift in market structure and begin to see order blocks and bullish PD arrays continue to hold. Otherwise, this fair value gap may act as resistance to push us down to that lower fair value gap that we've discussed. I mean, we also have equal lows down there, right? Price has been really bullish, so it wouldn't surprise me if price does want to come down to there. Now, if I would see the bonds drop and the yields rally, that would give me deep confidence in the fact that this is going to rally and then go lower, right? But there's just not a ton of intermarket relationships that I can get behind, right? The fundamentals and different things. There's not a lot of that to get behind like there has been for the bullishness. So you got to just, proceed with caution. You got to always remember that all the tactics that we learn, although they are very much consistent on a regular basis, there will be times that you have to submit to that you need to have more caution, right? Be more patient, not push your edge, right? And, based on your risk tolerance, right, that's going to, be a heavy influence in terms of how you navigate these types of conditions. For me personally, right, given what I just said, how there's not 1,000 things pointing in the downside direction as there has been for the bullishness, I'm going to proceed with caution, right? This is why I've waited till 6:45 and told you guys to wait, because we're getting a lay of the land here, and we see that there's some things that could stand in the way, right? Not only that, with things not being fully in alignment in terms of the bonds and yields, not only that, right, we got to wait for time, right? We are inside of a higher time frame PD array to the downside that could very well act as our trigger point to push us up above and continue going higher. So yeah, we'll see if that happens. If we do smash below this fair value gap, then obviously we can end up looking for this daily fair value gap to act as resistance, and then maybe position ourselves within that narrative to seek previous day's lows as well. Right? But for now, it looks like we're respecting that fair value gap. So we want to see reasons for price to maybe want to continue going higher, as long as we can see DXY turn. Then I'll be super confident in that. If DXY continues to go higher, right, for one, that goes totally against what the bonds and yields are doing. So that's a confliction, which makes you obviously start to be cautious, right? But if DXY continues to go higher, and then we see this fair value gap now hold, then we're pretty confident that we are probably going to reach down for further sell side. And the narrative would be just that. Does that change the overall higher time frame bias if it does reach down to here? Absolutely not. Because you go to the weekly chart, you can see it's just a fair value gap. Right? Right. It's forming a fair value gap. Right? So these are things you have to reason with in your mind. It's not always cut and dry like, oh, let's buy here and sell here at any given moment. You have to have things align. Right? We're in here looking like snipers, trying to find high probability and navigate the low probability, and be able to observe when it's low probability or high probability, So, and then does that scenario fit inside your model, right, at any given moment, So these are all the things you have to reason with. So yeah, so another observation you can point out here is the fact that yes, we have went inside this fair value gap, right? And we basically, here, let me put all the way. If you look at the fair value gap, we've hit that, right? If DXY turns from this high and maybe shifts market structure here, an observation that I can see right away is the fact that there's an SMT at the lows inside the fair value gap, right? So this made a lower low, S&P made a higher low, and the Dow has made a higher low as well. So that is signifying the fact that the S&P is the strength carrier, along with, oh well, the Dow's the weakest of them all, just because what we see, but it seems like the S&P, because it made the higher low inside this fair value gap, that may be justifying this fair value gap holding, right? But it shows that this is the strength carrier between the three indices, because this failed to get lower than these other two, right? While the NASDAQ has created a lower low, which is signifying weakness or underlying weakness compared to the other three indices, right? Alright, but yeah, so just a waiting game, you know what I mean? We gotta wait for things to come in alignment. Let's go do some lower time frame analysis inside of what we've just discussed. So yeah, we got this this SMT here. Again, see, this is what I marked out yesterday. We entered down here and smacked the crap out of it live, as always. But yeah, so price has already retraced more than 20 to 30% of the weekly range. I mean, it basically retraced the entire weekly range if you're looking at it from here, because it's a Sunday, right? So with that being said, we also have this whole fair value gap tapped into, and now we also have an SMT at the lows. Where is that SMT, you may ask? Right here. Higher low. See? And lower low. So yeah, we'll see if that holds. Oops. Yeah, we also want to pay attention to what occurs at this high, right? How is price going to use this midnight open price, right? How's it going to use that? Is it going to run up above it and then give us a hard shift in market structure going lower? And then do we see intermarket relationships at that moment respect that? Because if that's the case, then we will seek sell side here and then possibly here, which is in line with our higher time frame, lower deep discount fair value gap on the weekly chart, or the one that's forming basically. Otherwise, right, we may see price continue to go higher. If DXY turns around and smashes lower, right, then we'll see us continue to trust price going higher, especially if price breaks out of here, right? I mean, you could have an argument that this may be a market maker buy model if it does end up delivering that, right? So that's something. If price proves itself going higher, how does it prove itself? By smashing through premium arrays and then showing that it's using them as support, while other intermarket relationships are confirming in the moment that is in fact what's going to happen, right? That bullishness would be respected, right? So that's kind of how you will determine, or start to learn how to determine visually whether price is moving in your favor or not, right? Right now, because of how we're responding inside of this fair value gap, I'm favoring us staying in line with our higher time frame bullish bias because, again, nothing's changed. I do see contingency plans if that does turn out to be incorrect, if the favored side turns out to be incorrect, right? Which is the sell side here, these equal lows, and then equal lows here, which is in line with this larger time frame fair value gap, right? So, and if price breaks above here, hits this fair value gap, and aggressively smashes through, say, the midpoint of this, after taking out buy side from London, then I mean that's pretty significant, especially if DXY rallies at that moment, and then the bonds and yields provide the bonds going lower and then the yields going higher. If all that is in alignment, then this run above the highs here, maybe there's an S&T that also forms there. Like, that is a hugely loaded deal for price to want to reach lower, right? If that didn't stick to you right now, what I just said, you got to rewind it, maybe at the end of the video, or save the timestamp. It's like 6 o'clock. Can you see that? Yeah, it's like 6 on the screen. You want to save this time and go rerun that and listen to what I just said, because it's super powerful. Yeah, these freaking ads. Give me 1 second. All right, so I see that a good amount of you guys have just joined. Welcome. I appreciate you guys coming on. Again, we've been waiting till 6:45. We have discussed a lot of things already. If there's any specific questions that some of you guys have that have just came, if there's any questions you have, definitely leave them in the comments or in the chat. I mean, and hopefully we can get to it before 6:45. But yeah, I'm looking for reasons to potentially see price continue to go higher, depending on what happens. Even if we go higher, sweep these highs, then start to go lower, that's what I would prefer to see if price is going to want to seek the equal lows that I mentioned and go against the possibility for price to go higher in line with the overall higher time frame buys. I appreciate you, Joe. I appreciate you sincerely. Thanks. Thank you for saying that, bro. Appreciate you hopping on. When you could be on any other live stream, you're here on mine, a small channel, and you're trusting most of the things, or all the things that I'm saying, right? And again, I hope you guys don't just take people's words for anything. Force them to come out and do what I'm doing. Force them to prove it to you, right? It doesn't have to be monetary. If they can't show you on a chart what they're doing, the money that they so-called make or even show doesn't matter, right? Because who knows what the hell people are doing, right? I appreciate you, Nico. Appreciate you, man. Yeah, definitely, if you guys get value from the content, I definitely like, comment, subscribe, share with a friend, right? If some of these conversations help you and you have a friend that's maybe struggling, or just needs some support system, or someone that is willing to listen and give advice or share experiences with them so they can get out of the hole or any type of hole that they get in, definitely send them this channel, because this channel is more, the things that I do when I'm on these calls, when I'm with my private community, it's more than just trading, right? Trading involves a whole lot of things, and sometimes even having just that support system is vitally important and could be a difference between, you having a long string of hardship versus you being able to break through it quickly with people that are there to support you. I appreciate you, Maddie. I try my best to give you guys as much value as possible, but I appreciate you and your support, bro. I appreciate all you guys and your support. One day we'll be giant, right? And I'll remember everybody that was here, right? And I got so much in store for the future, right? So, but yeah, 6:30. All right, let's go dig on the 5 minute and kind of see what's gonna happen here, because there's gonna obviously be some crazy manipulation, as there generally is, right? So let's see just what it wants to do. Again, there is a possibility for price to go lower. I would like, if price is going to go lower, I'd like us to get above these equal highs here, purge those out, then give us like a strong shift in market structure, and then see DXY aggressively chase the highs, right? And then same with this. If we see this go higher inside this holiday gap, if we see price break aggressively to the buy side, and then we see this drop, then obviously that'll support. Oh, whoops. If we see this break higher, right, and then we see this show respect and drop lower and get down maybe below this low, for example, that will support DXY potentially continuing to go higher, and then that will present us with this going lower. Seems from what we're looking at here like it may want to continue like reaching for the sell side, which is, it's not unreasonable, right? I'd prefer, for me, if I'm entering in or even trying to position myself for a sell, I need to see buy side taken. Why? Because first of all, that's part of the model, right? All of ICT's models generally have a stop run. I mean, look at the breaker, look at the YouTube model, look at most of the models that he presents, right? Whether it's the charter ones or even optimal trade entry. It's more high probability after liquidity has been taken first, then you see it, because the job's been done to position losers with smart money entries, right? In this case, it'd be buy stops with their sell orders. Like they left these equal highs here. All right, let's go see if there's any SMT. All right, so there's equal highs here, no SMT. No SMT. Here there is SMT, right? Yeah, that's a pretty obvious liquidity pool. God dang, look at that. That's like way too perfect. That is suspect. I didn't even see how dramatic that equal low is. That's pretty impressive. So yeah, if the DXY and if the yields and the DXY continue to show support at these bullish PD arrays, then we will likely see price for at least the nasdaq and the S&P reach for their fair value gap. But then if we look at the Dow, right, we have that impressive lower time frame equal lows. Like that is like insane. Look at it. We got triple lows and then we got equal lows to the left. So yeah, we have a decent chance. If we break down below this low, this will become a breaker, and then I'm pretty sure if that presents itself, it'll most likely reach down below this low here. Again, we have news in 12 minutes, so we gotta wait, right? This is the opening range that we're currently inside of now. Let's actually go to the NASDAQ and let's try to push the regular trading hours gap. Let's go see what that looks like. So So we got a small regular trading hours gap above price. We got another one up here. Yeah, we got fair value gap here. So we got a really small regular trading hours gap. We can see how this also has a decent amount of the 4-hour fair value gap to fill in. So yeah, if DXY continues to rage higher, right? If the yields end up turning around and supporting bullishness, and the bonds drop, then that's going to drag the indices down by their hair and reach for the lower targets we've discussed. Otherwise, we need to trust the fact that we're going to stay in line with the higher time frame bias. We don't shake or disregard our bias unless something dramatically changes. And any sells in this case are they are counter trend, and the counter trend process needs to take place as well. That being, you have half or a quarter of the risk that you take normally because you're counter trend trading, right? Unless, of course, your model is all surrounding counter trend ideas and you're a contrarian and have that approach. Otherwise, like if you don't have that approach and you just take counter trend ideas as counter trend ideas to what you normally do, you have to have this protocol because it's going against the overall bias, and it could change, right? It could turn, and you don't want to get chopped up and spit out, or like ate up and spit out by price going against the higher time frame narrative, right? Because you're basically pushing against smart money, right? And obviously there's ways to engage that and be profitable, but you kind of want to tread lightly when you do that early on. Right, so yeah, let's go back to the lower time frame. So yeah, I see that we got these equal highs here. I wouldn't trust this at all to sell. I wouldn't trust it at all because one of my rules is I never sell when there's equal highs. I never sell into equal highs. I never buy into equal lows. I have to wait to see if it gets taken, because if it doesn't take liquidity, smart money hasn't positioned with willing losers yet, hasn't reached a full point of manipulation where the opposing side has been engaged, so then smart money can cannibalize them. That's their whole game, is cannibalizing people with opposing views, right? And they set them up, or they set up patterns like this algorithmically, getting people to think, oh, strong resistance, and then little do people know it smashes through them, positions smart money, and then they run away, right? So it's I mean, sometimes it will work out, right? Sometimes it will put it like this, and then your life really helps. Man, I'm grateful that it helps you, brother. I'm grateful. That's the whole. I'm glad that goal is being achieved, because that's the main reason why I'm even on YouTube, right? I have no other reason to be on YouTube other than that, right? I wasn't on YouTube for a long time. I was, still in the background helping, helping students that came to me, so I feel like, I've gotten so much good response similar to what you guys have said today, and I'm humbled and greatly appreciative of it. So I'm gonna just continue to do my best to pump out as much knowledge and usable tactics and honesty when I get it wrong, when I get it right, why, right, bias, and all the hard questions that people struggle with. I'm gonna try to get those answered as much as possible, right? So yeah. All right, so we got this fair value gap here. Let's observe how price respects or negates that. Let's see if that acts as support or if it looks like it's breaking through. So let's see if it acts as resistance. But I don't like this, right? It's a cracking correlation. Prices going both bearish. They're both moving in sync together. That's not how price is supposed to be in a high probability, symmetrical intermarket relationship style market, right? This is just everything moving in the same direction. So how are you supposed to trust and build trust behind particular ideas aside from guessing? And it's going down and everything's going down. So, right? Like other than that, which is obviously not a true statement, if DXY goes down, indices should go higher and vice versa, right? If that's the case, right? If things aren't in alignment with that, then obviously what does that tell you? That tells you, okay, this is a time for me to wait. There's a time for you to engage. There's scenarios for you to engage, right? And there's times to not engage. There's times to trade, times not to trade. Being able to identify those times is part of you it's part of you developing a longevity in your trading. That's a question a lot of people ask. When should I trade? When should I not trade? Well, this is part of the when to not push your trades moments, right? Like if things are not in alignment yet, you have to wait. Right? Now, if DXY smashes lower and then this breaks above this high, we may have a scenario that we can engage, reaching for the fair value gap and the buy side up here. Right? Because again, we're still respecting this daily fair value gap. Right? And all price has done is retrace off the highs and use Thursday reversal profile as the narrative. Right? So we'll see what happens here. And it's overall higher time frame bullish trend. Nothing has changed, right? So we cannot forget that fact when we're sitting on the lower time frames. We cannot forget that fact. So then we're able to objectively look at what price delivery is doing without getting swayed because we see one down candle on the 6 or 5 minute time frame. And then start doubting yourself and all these unnecessary things. It has to do with your process. Right, to be able to avoid that type of stuff, the extreme doubt in terms of your narrative, I mean that's a huge part of it, right? Being able to navigate and understand those higher time frames and how they impact the lower time frames, right? I have a drill that I tell my students to do, right? Go from higher time frame, right? Find your opportunity on the lower time frame, then go all the way up to the higher time frame, screenshotting what price looked like, right? And then of course there's weekly range. The weekly range and daily range drills that I also tell my students to do. I also have I have that particular drill described in the Power 3 playlist, right? So if you haven't watched that, definitely go watch that after this, obviously. But yeah. So yeah, looks like this is continuing to go higher. So in my opinion, we're most likely going to continue to run higher in the indices and see the DXY continue to go lower. Right, so it looks like this is going to continue in the narrative we painted and the narrative we've continued to trust, which is bullishness. Right? We considered a contingency plan, considered the fact that we do have particular ideas. But again, like I said, if things fall in alignment, intermarket relationship-wise, as we go into this news event, as we break through the news event, if it starts presenting itself with a run higher, price drops here on the DXY, and then the bonds and yields show what they're showing currently, right? That is going to influence the indices to go higher and continue their higher time frame bias. Which again doesn't change constantly. Now intramarket relationship wise, SMT at the lows. Yeah, we pointed that out. Yep, right here. So that's just another factor inside that fair value gap, especially if intramarket relationships agree. That being the DXY and the bonds and yields, if they agree with this being bullish, which at the moment looks like they do, right? That SMT now has a pretty deep importance if we can stay inside this fair value gap, right? again, now prices moving in tandem with each other, falling lower with each other, not having the intramarket relationship characteristics that we like to see for a symmetrical market. So that means it's higher risk, right? It's higher risk, and it depends on you, right? If you feel comfortable taking a particular idea, I'm just sharing my opinion and whether I am going to engage, or what I would engage or what I wouldn't, why I think the way I do, so on and so forth, right? So definitely keep your independent thinking, obviously, but I personally don't have what I want if I was to sell, and I don't have what I want if I was to buy. The sell, if everything was to fall in line and I came to the determination that it's going to sell, I need to see price get up above these highs, or at least purge some type of buy side liquidity first, then present us with something like this. Or if price is going to rally, right? It's not unreasonable for us to see them go down here, sweep out sell side, then give us a hard run higher to then seek out previous day's highs and equal highs here and equal highs here. That's not unreasonable, right? DXY is now turning around with the news event, right? DXY reacted off this news event now, right? So let's go see what is happening here. So that run higher looks like it may have been short-lived, right? Now it looks like the yields are going to rally. We'll see if the fair value gap is going to be reached into here, right? So now we can see how price looks like it wants to attack the sell side liquidity I pointed out earlier as a contingency plan, which is this here, these equal lows here, and then eventually the daily fair value gap way down in a discount. So I wish it would have ran up above this high a little bit more, because we got triple highs up here, which is very suspect, right? Difficult to trust ideas that have underlying things like that, because that's liquidity that's present. Sometimes it may, be respected. I don't trust anything that can be called support, strong support or resistance from a retail perspective. Sometimes it plays out, sometimes it doesn't. More often than not, you will get your ass handed to you trying to assume positions when things like that are present. Right, so now we have pretty much seen the reaction or response off of that news event. Right, looks like DXY and the yields are going to reach for this buy side liquidity up here, because clearly if anyone was winning from the last couple of weeks, they've probably rushed their stop here. So the near term liquidity would be right here. And again, we still have this fair value gap down here. And the yields have done absolutely nothing all week. Consolidation. And now the bonds also consolidation. So what do I always say about the bonds and yields when they're in consolidation? It sends reverberations through the marketplace, makes it harder to read, makes things not be in alignment, out of sync, right? Or do things like what just happened here, take forever to then show itself. But it uses a news event, right? Remember what I said a couple of days ago too, in terms of higher time frame delivery to particular levels. How to time that? Well, if you're looking at something on the daily to deliver, generally it's going to occur at a news event, right? Look at what this news event has done, right? This news event has now triggered price to move with volume, right? Remember what I said about the midpoint of the wick if price was to go higher? Looks like this market maker buy model, as we discussed, is now, in my opinion, probably going to continue to come to fruition, right? This is indicative, characteristic-wise, of a market maker buy model being valid, right? Everything looks like it's totally moving in sync, except the yields. It looks like they may be coming around, though, right? I'll tell you one thing, if this high breaks on the yields, and it's aggressive, we'll see the DXY be pretty aggressive too to try to reach for these equal highs. I've had these equal highs outlined for freaking weeks. Took forever, right? It takes forever to get to levels sometimes. But yeah, so we'll see what happens. See what happens. So yeah, now we've pierced out pretty decent buy side liquidity pool. All right, let's see what happens here. See what happens. So got this fair value gap. I mean, it's totally reasonable too, like just considering the fact that we've been so bullish. I mean, mind you, what on God's green earth is providing the U.S. economy or the stock market to be so inflated, right? Like what possibly could be impacting this, right? I mean, we could say Nvidia, right? And the handful of stocks that are worth freaking trillions of dollars. But man, everything else is on fire. It's definitely a sight to see. That's for sure. See, we could see a huge crack in correlation here. One thing doing one thing, the other two doing another. How are we going to determine which could be trusted is going to solely come from what the bonds and yields choose to do. And the bonds and yields may choose to do not much, right? So just given the fact that that's the facts, you just have to submit to the fact that you got to just relax, right? Because it's better to miss a setup or not take a trade setup that you couldn't trust fully than it is to just go in breaking the fact that you know that it's not fully trustworthy, and then taking a loss and then wishing that you didn't take the trade because you know that things weren't in alignment, right? It's better to admit that to yourself. It's better to not engage when you don't see everything in alignment. Yeah, so the S&P, so technically the S&P is basically an accumulation of all 500 of the best stocks in the stock market in the USA. Then the NASDAQ has 100 stocks very heavily influenced by tech, basically a lot of the tech stocks, top 100. And then the Dow is the one that has 30 stocks, which I believe also has some tech and a couple of different industries as well. And that's why the Dow is more volatile, because it only has 30 stocks versus the NASDAQ, which is also pretty heavily manipulated, right, and moves quite a lot. But it has a little bit more. It has less than the S&P, which is why the S&P moves a little slower, because it has so many stocks involved. But yeah, so there's 500 stocks in the S&P, 100 in the NASDAQ, which is heavily tech-based. And then also the US 30 has basically 30 stocks in it, which is why it's more volatile out of the three. Right, so yeah. Definitely the world of stocks is definitely interesting. I just feel like everything is still so manipulated. It's just all so heavily manipulated. It's just like, it's incredible. Everything else could be on fire, but the stock market's cool, right? Like, it doesn't make any sense, right? Just pretty crazy. So yeah, now we're moving into the 650 macro. It looks like the bonds and yields still aren't really doing much. I've started using large cap. Oh, heat map. Yeah, those are the heat maps. Unfortunately, and all these little tools. Unfortunately, they're either lagging indicators, which are basically useless if that's the case, um, or it's just just a gimmick. Of course, if it's helping you make decisions and be more confident, while you apply it to the smart money trading stuff that you're learning and trying to trade with, don't let me convince you otherwise. But that's just how I view things. I used to use, I think it was called the heat map. Forgot what it was called. Yeah, Confluence. Yeah, that's fine. That's the thing. If you understand technicals and you're able to especially understand ICT concepts, you can use indicators and other things, and you'll be able to be successful. Even if you trade retail logic, like trend line, support and resistance, but you're able to use also ICT concepts underlying to like confirm or have as a confluence, then you could make these things actually work. Or if you also use the timing element mixed with other retail logic, you can make the things work. It just of course matters what helps you, right? And don't let anybody sway you. Take advice, right? Take good advice, but also keep that individualistic mindset, right? And your individual mindset intact. It's a trading view. Oh. Okay, I see what you mean. I see what you mean. I had something totally different in mind, where it shows like I remember when I used to trade binary options, right? There was like this little heat map thing. It was like super colorful thing telling you what's hot, what's not, and a lot of the times it was incorrect. I just stopped using that thing like within a week. But yeah, binary options is a whole nother conversation. ICT concepts works in all kinds of trading though. It works in options, works in so many different things. So you can be it also works in long-term investing if you're trying to manage your own retirement. It works like when do you find setups to enter in? Well, use an ICT model and then look at the stock prices and individual stocks, and you could long-term invest as well, very accurately. And super effective, more than any of these fund managers, that's for sure. Be your own fund manager, because all they do is take a ton of commission anyway. Freaking clowns. Yeah, so obviously we can see from at least what we see in price delivery, the daily fair value gap is looking to be fulfilled. Right, it seems like that's what's on the menu for today. Right, so because that's the case, if this continues, we have that daily fair value gap that may get reached into. I think we have news at 7 too, yeah. So we got news in 3 more minutes. So we see the response from the news basically was a bullish bullish DXY, and then of course the heaviness in the indices. Again, a red flag that makes it so I'm automatically not even looking to enter because of the rules is the fact that there's triple highs up here plus equal highs up here that haven't even been purged. So they clearly left that for a reason. It's clearly left there to signal supposedly strong resistance. Very deceiving, right? Inside of a market that's been bullish and has not disrespected anything in terms of bullish structure on the higher time frame. So that makes me suspect that this is all a setup. It's a trap. And they're rallying up the DXY while we've seen this be so bearish in the yields. And it looks like there's an ability for price to be bullish in the bonds to attack a very logical, reasonable level. And I mean, it could reach lower, sweep out this sell side, then go higher. It could do that for the bonds, and then maybe it rallies up, hits the high here, then goes lower. But I mean, given what we see here, I'm assuming that it's going to reach up into here. Whether it breaks down here first or not, right? We just have to wait and see. But because it's consolidating also, right? It's making it a little less trustworthy. And then, of course, like I mentioned, we see these equal highs here. Sells are definitely, in my opinion, not trustworthy. Again, that's my opinion. If you felt comfortable with it, was something that you felt comfortable with, just take my opinion with a grain of salt, right? Because again, me doing this is in no way trying to take you away from being individualistic and keep that independent mindset. Because no matter what I say, no matter what you see me do, how successful you could see me become, or how much money I make, none of that will matter if you're following just to be like a signal junkie, right? Right? Like if that's what you're aiming to do, it's going to damage you in the long run, right? Because I'm here trading full time, knowing what I do, right? And I'm able to pay my bills with trading and support myself with trading. Following me just to copy trades, what if I'm not live, right? Like what if something was to, God forbid, happen to me, and that's what you put all your faith in is somebody that's going live, right? You could see where the risk is in that, and the risk to that reward. I mean, it's not a good thing to do. So you want to be here to be very like a sponge. You want to be a sponge, try to soak up the knowledge so you can be an independent thinker, right? And then obviously continue to gain wisdom and knowledge, wherever you see it present itself, right? But yeah, so like I said, this is suspect, okay? So again, whenever you see something like this occurring, when there's equal highs and prices going lower and the whole scenario, like we're overall bullish, but it looks like it's digging deeper to punish sell side, but there's equal highs above us because it wasn't purged. Now take this into consideration. If it was purged first, and then obviously DXY was to continue to go higher, if that happened, then obviously we would be able to trust the fact that we're selling off, and it may in fact dig deeper in a trustworthy fashion. In my opinion, it's not fully trustworthy because look at what it's done. It has left equal highs resting above, right? These equal highs inside of the fair value gap as well, right? Now, of course, we've broken out a little bit, but still, there's these equal highs, and it's still inside of a bullish market. Let's go observe some of other indices. We could see also, there's S&T here between this low and this low. So there's a big S&T there. Just looking to see if there's any other S&T. So yeah, there's a pretty massive S&T below this low, from this low to that low, and then in between these lows as well. It's showing the strength, at least currently, in the Dow versus the other ones, right? We did have the S&T at the lows here before it broke through on the NASDAQ, right? But we also see how the full fair value gap has been filled in the NASDAQ, but only part of it's been filled in the S&P. So there's still underlying strength between the S&P and the Dow versus the NASDAQ, right? We also we are starting to see the fact that this seems like it's getting interest to go higher here in the yields, and if this continues, right, it may want to seek the sell side, which then promotes the fact that this would push lower, right? Again, I do wish that we would have taken this high first, because if it would have taken this high first or this high aggressively, then sold off and did this, I'd be looking at this as a possible entry tactic, right? Whether it's an optimal trade entry, whether it's something that presents the YouTube model here, like if it would have ran above these highs, instead of setting equal highs like it did here, this fair value gap would have then been respected and trusted by me to then engage to go lower. But again, that did not happen. We left equal highs. So guess what? The risk is higher, more elevated. And I'm just not willing to put risk on something that is in a scenario that I've seen turn incorrect more often than not when there's equal highs up above there and we're trying to sell. Again, I mean, you could make the argument that this is SMT here, right? You could make that argument, I guess, slight, but that's, in my opinion, it wasn't enough. And obviously sometimes it'll take off even when it barely runs up above it, right? Or barely purges a liquidity pool, right? But at least for me, in the way that I view my trading, I'm willing to miss that setup, right? Because it is what it is. There will always be a setup. Always, right? Now we're going into the silver bullet, so we'll see if there's something that provides itself here as well, right? Looks like we're just coiling up for the bonds, and the yields look like, they're similarly coiling up. We did use this holiday gap here as support. So they basically tried to deliver once more. Now they're pushing away. If this does prove that it wants to go up here, we will see DXY continue to go higher, and then that will provide this downside move to hit the contingency plan, which is the daily fair value gap down here. It'll turn that into the target for the day, right? And again, just because I'm not trusting or engaging doesn't mean that you don't consider. If something made sense to you, just because I'm not doing something doesn't mean you throw out any of your own personal opinion, right? You have to hold on to it if it's reasonable. Consider what I'm saying about the equal highs, how they weren't purged, how I view it, and then take what makes sense to you and what you feel resonates with you, and reflect on it. You know what I mean? It's a very important process when it comes to you evaluating yourself, evaluating the conditions, what you can take away from each experience, right? Each experience you have on a daily basis, whether you're watching someone or you're doing it on your own, tape reading, each experience is adding a page to your book of experience. That's why journaling is so important, because you can physically see that experience, and it doesn't just get caught up in the day-to-day trade engagements and get lost in the vast amount of experiences you have and will have over the next couple of years. So yeah, let's see what happens. Sorry about that, guys. Fix something real quick. But yeah, so see what happens, right? Like, let's see what happens. So yeah, consider what I've said, and let's see if that has an impact, and whether these equal highs and the rules that I just stated in terms of why I didn't take a sell. Let's see if that saved us right? If that would have saved you if you pushed, pushed a sell. If you did push a sell, obviously there was a profitable setup there to reach down below the low here, right? And I mean, the DXY did rally, right? It did respond late after the move, right? And we have a possible opportunity here if these suspect highs do end up getting attacked, right? We potentially have a setup here after taking out sell stops to then continue to go higher. See what happens at this fair value gap here. DXY. We'll see what happens with DXY too. See what happens. Zoom in. Let's look at ES. So ideally, this looks pretty nice because of the fair value gap that we've respected. It looks like a pretty nice, decent scenario for us to sweep sell side inside of the larger, higher time frame bullish bias to then position to try to get up above these equal highs. Just would like the yields to decline, obviously, and the bonds to rally to confirm. But we'll see if things will play out regardless. Or not, right? We'll see. That's what I want to see here. Given the liquidity that we see currently, that's what I'd ideally like to see. Because it's just obvious, right? Like these are very clean equal highs. DXY seems like it's still weak. It has a narrative that could reach down below. Has purged out buy side. So this should be a decent opportunity to get us up above those highs. look at the three indices side by side. See what happens. It's funny because pretty much all the indices, even including the Dow, has liquidity that's pretty decent to the upside. So we'll see. I definitely, like I said, I want to see DXY continue to fall. If it does, it'll just bread and butter buy side, basically silver bullet, fair value gap, entry, just to attack very obvious equal highs. And all you gotta do is aim for, small amount of points. You don't really need much. If you would have entered there, all you would have to really get is up to here. It's 5 points. You get in and out. You know what I mean? Like, one thing you want to consider too, if you think 5 points is a small or not worth it target, but you're not profitable, I mean, how ridiculous does that perspective sound? Like, you can't even the people can't make $1 and they would criticize you as a new trader for making 5 points and being proud of that. Just imagine. Like, that's just, it would, I see so many people criticizing new traders about these types of things, when in reality, this small move that we just called out beforehand can help you quit your job. Who's the real dumbass? Right? Like, who's the real idiot or, person that should be criticized? All right, so take it from me, take it from ICT. Don't ever let anybody criticize you about taking down small targets. Because you'll work your way into bigger targets. And hanging around here, you'll discover how to do that. Hanging around ICT concepts, doing higher time frame analysis, fundamental analysis, the whole process of bias, all that stuff will help you get there. Oh, I was fucking right there. Whoops. Yeah, sure you can't see it. Okay, look right here. See? Trade of 8. Boom. Right, just to prove that I do what I tell y'all. We don't be playing games over here. It's continuous. You know what I mean? My private community sees it every day. I love y'all, by the way. And all y'all that hop on this YouTube channel and support me, even though the channel's small. All you guys that put trust into me and listen to what I say, when you can listen to anybody on the internet, I greatly appreciate you. Mind you, from this low to that high, it's over $300, by the way. Regular standard lot on the S&P, in a funded account, in a personal account. Regardless, most people, at least in the United States, don't even make $200 a day at their job that they work 8 hours. This is one of those situations, like one of those topics that really irks my soul. Because at first, I was one of those people that was like, oh, I don't want a couple points. Like, that's stupid. A couple pips. Like, I criticized people for having that perspective, which is why I'm so hard on it now. Because I'm not aiming at people to be hard at. I'm being hard on my own perspective that I had to correct. And then now I'm making sure that any of you guys that are here, any of you that are in my private community, any of you guys that support me, trust and believe that you don't need a lot to do a lot. you do need a decent sized account. There's no getting around that. Maybe that takes you a little bit of time. Maybe you have to focus on cutting debt, cutting bills, cutting different things to pour in until you can get like, $25,000 to $50,000 in an account, right? Maybe it takes a little bit of time for you to do that. Or maybe you have friends or family that you can tell them, hey, once you have this skill set, you can show them in a demo account, hey, I'm really consistent with this. I know it works. Maybe they'll let you borrow money, right, from them, and just break them off a piece of the profit like you would a funded account, right? That you got to get creative with how you're going to do this, or you could just focus on, getting a funded account, taking one lot. This is $300 to $312 exactly. Okay, so it's like, is that not a good amount? If you saw $300 on the ground, also knowing the fact that the conditions are what they are, right? Set that aside. If you had $300 or $200 on the floor, would you just let it go and demand more? Or would you think about the bills that you have to pay, right? Or would you think about the people you have to take care of, and you'd pick that money up, right? You decide. One side of that equation is going to be profitable consistently. The other side is going to get their ass handed to them, and it's just going to be frustrating, right? And again, this may get up here, right? We've already decided that it may reach up into here and everything is in alignment, right? But what I'm doing here with these small moves, right, with continuously, almost every live has been an opportunity like this. Notice how patient we've been. Notice how we waited and waited and waited and waited and waited and had a dialogue about many things, right? Many different considerations, right? Notice how we don't have to worry. We don't have to panic. Going back to what Maddie said earlier. So you think it's valid buy sell liquidity taken the 1 minute candle from 925. 925. Oh wait, that's 6. You're probably East Coast. Jose, if you're still here, 925 didn't have a run on stops. And this right here, you must have joined a little bit late. But yeah, I said that this was suspect. That's why I didn't take any setups here. That's why I didn't participate or even tell anybody else to participate. Again, it did play out, obviously. But I personally, with my model, because I lead myself and I don't get swayed from anyone's opinion, I knew what I was waiting for. I knew what I wanted to see. And I knew what made me not trust getting in a sell based on the models that I use. Right? And this was obviously a beautiful setup. And if you were able to participate and you have your reasons, don't let me change your mind. Because this maybe fits your model. It fits what you believe. Just something to consider, obviously, is what I said about the equal highs being set. Obviously, it looks like it did barely breach the high. And yes, that does happen. And yes, it does present, obviously, opportunities. All right, and sometimes, in 2 or 3 of the calls that we've had live, we've been able to go down and up, right? Both in the manipulation and the real move, right? That doesn't mean you have to do that. Eventually, hang around here long enough, you will understand how that's done and why that's done, and if you should do it or not, right? But again, all you need is something like this. Something small like this, right? But yeah, this for me personally was not something I would have participated in, right? Maybe you think that was valid, right? Don't let me change your mind. Just consider the fact that I said that because there was triple highs left, I did not trust that this was not going to be attempted again, right? So what does that mean? That means I didn't take the trade. That means I didn't participate based on my rules, right? And part of my rules are I don't sell when equal highs are left. The model is invalid to me if we leave equal highs like this. It did pierce up above it, right? And I miss moves when it does this, if it does take off. But I've learned over the last 3 or 4 years that this type of scenario, it comes back and bites me many times. Then it goes in my direction. Especially if this occurs and I try to participate in something like this before or at the open price. But you can clearly see that sometimes it still plays out. Right? So Jose, I hope you're still here, and I hope that made sense. Right? So let's go see what's happening. So it looks like the yields are going to continue, or they're continuing currently to have their strength. And it looks like we're continuing to possibly favor bonds going lower. Right? Looks like the NASDAQ has retraced and turned. Right? Looks like they just wanted to leave this, but the DXY looks extremely sloppy. Right? So again, that's something that I don't trust. See, story of your life, huh? Well, yeah, I'm telling you, Maddie. I'm telling you, brother. The rules that I share with you guys, they all have a purpose. And the purposes mainly is to protect us from these kind of issues. Like you have witnessed today how it protected me. I did miss the move, right? The first initial sell, and maybe it's going to sell even deeper and attack the daily fair value gap that we looked at, that we've painted since the very beginning as a possibility. Maybe it does that. But as you back test, if you go back and look when equal highs formed before or near the 6:30 open, Pacific Standard Time, by the way, I'm in California, you'll see that a lot of times it will shake those people out, then go, right? Like it'll pierce these highs, then go, then do something like this. Or it'll give us like these equal highs, give us like a false sense that it'll go lower, sweep out liquidity, then run up one more time, then take people out during the opening range, then deliver something like this, right? That's part of the manipulation that we have to start getting really experienced in observing, which we do a lot of here pretty much, right, in my private community. But yeah, it won't be the story of your life for long, bro. You spend enough time here, you're going to realize that you don't, for one, have to worry about missing a setup. Because most of the time when we enter knowing that some of the rules are not fully in alignment, a lot of times when we enter in that capacity, it's because we're scared of missing a setup. But in reality, there's always going to be a setup. And you have to remember that if there isn't, if something does not transpire, you have no reason to be worried about it, or tell yourself that you're not going to catch a setup, or tell yourself that you miss a setup and you don't know how to trade and all these different things. There's just no reason for it. Because it's, first of all, not true, right? And second of all, there is a ton of moves constantly. Just because you have one model and you see it perform once in a price leg doesn't mean that it won't turn around and present itself again, but this time in the form of a continuation variation. That's why ICT says you can have one model and be profitable and very successful and have more setups than you can ever imagine. Growing confidence to allow moves to happen without you. Exactly. See, oh, you know CJ? Oh, that's my boy. That's my guy. You don't miss a move that doesn't follow your rules. Yeah, exactly. And another thing to add on to that topic, or that perspective, is if you are following your model and you take a loss, was that really a bad scenario? In reality, it's not. If you followed your rules and you took a loss, that's totally fine. Because it's going to happen. Things are going to fail sometimes. Maybe you miss something. So what? You know? As long as you're following your rules, that's number one. Because if you don't follow your rules, if you're not disciplined, win or loss, how are you supposed to be consistent if your process isn't consistent? You know what I mean? It's impossible, right? It just doesn't make sense. Like if you're running a business and you're doing a bunch of random crap every day, not having a set process and how you do things. Like if McDonald's was making hamburgers, then all of a sudden they start making hot dogs, and they don't know anything about making hot dogs, but they just want to try to make money. I mean, clearly their brand will be tainted, and clearly they're not going to have accurate data on how many hamburgers they were able to sell. If they're trying to mix in all the stuff, right, and not have a specific process. It's the same with your trading. If you're not able to go into the market and do the same thing over and over and over with the same model, same views on things, win or lose, then how are you supposed to review your journal and your performance accurately? You can't. That's why it's a huge problem when new traders come out here and try to learn 500 models because they just want to make money. Well, how are you supposed to improve on and find that one model that fits you, that actually will work for you? You can't. It's impossible. That's why the learning curve is so long for many, many traders. Because, I mean, for one, they probably don't have anyone telling them this, right? And second of all, they probably never even thought of it this way, right? They just think more is better. Just like the people that think more trading is better. More entries will give me more money. No, it adds to the risk. So think about it. If you're trying to trade multiple models and you're trying to trade too many trades and you're over leveraging, I mean, you can just imagine why the failure rate is so deep. You can imagine why. It's not, oh, this is difficult. It's just being done incorrectly, right? That's the thing. A lot of people don't give themselves enough time, first of all, to reach this way of thinking. And again, like I said, a lot of times there's nobody really telling these people this type of stuff besides ICT and some of the charter students and even some of the YouTube veterans doing ICT concepts. Even some of them are pretty phenomenal traders just off of the YouTube content. Now it's like, there's everything out there, right? So, everyone has a even playing field aside from maybe some of the private charter material, that hasn't been shared, but yeah. Oh, dang, he speaks highly of me too? Really? That's interesting. Haven't talked to him in a little while. Yeah, I'm gonna have to go talk to him after this. Like, hey, what are you saying about me, bro? If you guys don't follow CJ, if you don't know who CJ is, you definitely want to go check him out. Probably, maybe I'll throw his handle in the description of this video too, for those of you that don't know him. He's one of those people. I don't really endorse a lot of people on the internet, although there is a decent amount of people that I respect that have helped me. It's hard to endorse people because a lot of people don't think this way. Most people don't think this way. Most people are out to just scam people and do a bunch of nonsense. Yeah, he said that. Man, that's. Yeah, I'm gonna have to go talk to him. I'm definitely gonna have to go talk to him. I really appreciate that. Freaking CJ. Yeah, he's a monster too. He's definitely a monster. Definitely worth spending time with. And I think he's got a service too, just like I do. It's definitely worth it, It's hard to get to a mass amount of people, and a lot of people want to waste your time. So that's why you see some traders offer services, because their time is valuable, and if they have something of value and they want to find people that value that value and value their time and actually value their experiences in the marketplace and want to improve, that kind of weeds those people out, the ones that don't care. And I've personally witnessed that, right? And It is what it is. I taught hundreds of people for free, one-on-one style, and it's a lot of work, you know. And when you feel that someone's not valuing something that you value tremendously, that's changed your life personally, you feel like you wasted your time helping them. It's not a good feeling, you know. So that's a lot of, and at least a small handful of cases, the ones that have services are approaching it from that perspective, and I think that's noble. You know, I think that's something that should be respected. But all these idiots that try to scam people make it seem like it's a bad thing or someone's out to be malicious, because the vast majority of people are malicious, and it's unfortunate, you know. But you know, there is good traders out here. You know, there is people that do care. CJ being one of them. You know, I don't really toot my own horn, but I'm definitely one of them. You know, not only just with the way I think, right, or how I feel about it. It's, you know, some of the testimonials I've got and seeing some of the results from the students kind of speaks for itself. You know, again, I hope you guys always get value from the things that we discuss. I know sometimes it's slow, but I mean, that's just the nature of trading. You know what I mean? It's just something that, you know, something you got to get used to, right? Because sitting and waiting and prepping and studying and marking up charts and trying to do the legwork, which most people don't do, which is another reason why it's difficult for most people. It's one of those things that's mandatory. You know, you got to do the boring stuff to get the fun stuff. You know, it's not fun sitting doing something that you're completely lost doing for months and months and months. You know, sometimes it's not fun. Sometimes it's not encouraging, you know, but everybody goes through it. As a trader, everybody goes through those ups and downs. Everybody goes through winning and losing and trying to fight that inner voice that's doubting themselves and, you know, trying to fix the way that they think, the way they view failure. It's all part of the process, you know what I mean? See, so something like this, what we see here, if we can see, if DXY does continue this, let's see if there's SMT at the lows here between the indices. Let's see. So there's SMT at those lows. We still have those equal highs. So prices swept liquidity here on 2 occasions. Still got equal highs. So if we break above this high here and create a fair value gap and DXY continues to fall, then I'm pretty confident that this will also be a YouTube model entry in a fashion of continuation. And then that may present another possible idea to study getting us up above these highs. Again, it's a little harder to trust because of what the interest rates are doing, with the yields going higher and the bonds seeming like they want to seek sell side. Yeah, just something to consider as we continue to tape read and watch price. The Dow. If you go back and count how many times the Dow has done this, right, like given a huge expansion, like an aggressive run higher, and then comes all the way back down, and then aggressive run higher, and then comes all the way back down, compared to the other indices. It's pretty fascinating. At least this week has done that a lot. It just goes back to what I'm saying about the interest rates. When the interest rates are shaky, it makes the environment a little bit harder for us to see clean moves, for us to fully get behind, at least me, because I use it like heavily as a trust building factor, because that's the key. Like, most people don't know what elements help you trust particular ideas. Part of that has to do obviously with the bias validation, invalidation process, trade management, invalidation, validation process, which is the same as as the higher time frame, validation, invalidation, with the 3 PD arrays, along with, of course, the interest rate delivery at any particular given time. Inside of a kill zone, I should say, right? It's not just any random time. So yeah, we'll see. DXY, I mean, you could see DXY has been very much sloppy. Since London, it's just been, sloppy. It's the conditions are holiday week, lack of symmetry, consolidating bonds and yields for the whole week. Obviously, you could see that there's setups that could be pulled out. Pulled out some here, pulled out some the other day with my private community. So there's obviously ways to participate. But again, just like I talked about earlier in terms of the acceptance of the smaller potential target, right? When you're able to observe and understand the high probability versus low probability components, which is pretty much a lot of the things we discuss, you're able to observe and understand when you should keep your targeting small. Like today, I knew I got to keep the target small because there's a possibility for us not to get above those highs and just remain sloppy. And obviously that experience and that understanding allowed me to be profitable versus somebody else that maybe tried to hold and demand that these highs get taken, and now they're either in drawdown or got stopped out. When they could have just accepted the bare minimum, which in this case is a decent amount if you're trading one lot in the S&P. Like that's, anywhere from $250 to $300 for 5 to 7 points. A couple of minutes, right? It's not much. And then you end the day not stressed out, happy that you made profits, happy about your discipline, especially if you took one trade or even 2 trades but managed risk properly and followed your rules. Right? These small, minute decisions lead to pretty intense, either positive or negative results, both mentally and financially. So yeah. Yeah, do you guys have any specific questions from the things we've talked about today, or anything you've experienced if you've been engaging on your own? Definitely let me know in the chat. Yo. Oh my gosh. My students are funny, yo. Oh my god. That's so funny. I think I had a decent amount of my private community students hop on today. I didn't even know. See, this is a beautiful example here, right, of independent thinking. And I'm so proud of my students for doing this, and anybody else that's able to do this. We talked about the sell and how I didn't trust it, and how you need to keep your independent thinking. And all the elements that we discuss come into play. This particular student, I got to shout him out again. I shouted him out last time. But this particular student has had an amazing, truly amazing hit rate He's at like 75+% hit rate, and it's been incredible to see him grow. And he's only been here for a little while, you know. I believe he's traded for a little while, but man, it's just a beautiful example of being able to trust your own opinion. Take what I'm saying, right? Take it to heart. But remember your own personal rules, right? Remember what you're doing in your trading, right? I'm here to give advice and clarity and how to reach particular things in terms of clarity. But again, profitability is going to come down to you and the decisions you make, right? There's a lot of things that I continuously give advice on, and a lot of things that I continuously give in terms of tactics and what to pay attention to, what to do, what not to do, when to trade, when not to trade, the whole process behind that, risk management, all kinds of different things, right? But again, at the end of the day, you know, you make your plan, right? And you're gonna, at the end of the day, be the reason why you become profitable or why you're gonna struggle, you know? And a lot of times that's gonna come from experience too, either a lack of it, right? Or, you know, success will come from you having a ton of it, right? A lot of things can be attributed to experience, right? And experience specifically meaning you applying particular things that you learn. And doing these lives, I try to focus it on gaining clarity and why I believe certain things are going to happen, why I believe certain things won't happen, why I trust or don't trust a particular idea or bias, right? Managing like trades and what will invalidate a trade, what will validate a trade, high probability versus low probability, how you need to respond, how you need to be thinking or consider thinking. But that in no way is telling anyone to disregard things that you like. Like if you like using retail things for like certain retail tools for confluence, aside from everything, don't let nobody fool you, or pull you away from that. Right? If it helps you, it helps you. This is your business. It's your trading. It's your career, your life. So don't let anybody ever take that away, even if you see them doing well. Because again, at the end of the day, it's going to be you and the man in the mirror when you're staring at these charts. And you have to be able to have full faith in that person you see in the mirror. And a lot of the confidence in that comes from you telling yourself to do something, setting particular parameters and specific ways of doing things and following through with it. So you can trust your word. A lot of people don't trust themselves. They don't trust their word because they lie to themselves or whatever the case may be, right? They portray things that they're not, or whatever the case may be, and then they lack confidence. And that gets amplified. Things like that get amplified in the market. You know, so again, that's another one of those key elements that people don't realize that makes trading difficult. You know, you got to master yourself. I post a lot of things on my Instagram that talk about that. Like my Instagram is literally just like a psychology like library. At least some of the topics and pieces of ICT content that has helped me psychologically over the last 4 years. You know, and on my continuous studies, I listen to something every day about with ICT, from ICT's Twitter Spaces to different videos that I remember him talking about, like what he would do if he was 20 years old. Like it's an amazing series to go and listen to hundreds of times over and over. I still listen to it on a monthly basis. I go back and review, you know, because you got to keep sharpening your iron, you know, keep sharpening your weapons. And your weapons in this are knowledge and self-control and self-confidence, being organized, experience. Those are your weapons that you wield in this battlefield. And again, if you can't trust the commander, that being you, it makes it a whole lot more difficult. And a model, a technical skill won't save us from that, from a lack of that. You know? But that's why this is difficult for some people. because they try to seek where's that silver bullet technical skill, when in reality, it's much more than that. And that shouldn't be like something that people hear and they get worried about it. It just means that, make this mean something to you. Give it the time it deserves. Give yourself the time you deserve to be the best you can be inside and outside of trading, right? Personal habits, right? That inner conversation. Cultivate positivity in that. Don't beat yourself up even when you make mistakes. It is what it is. We all make mistakes. None of us are perfect, right? And we definitely won't be perfect in the market. I'm not perfect. I take losses. But how you manage those, how you move forward from those is what will determine a lot of things about you as a trader. So yeah, like I said, since this now got taken out and there's SMT at the lows, I wouldn't be surprised if this here becomes the move that gets us up above here. Notice the time. The time is, can you see that? I hope you guys can see that. The time is 7:50. That's a macro time window. So here we go with timing, right? So let's see if that is the move that pushes price higher. Now what am I doing here? I'm moving up to see if there's a possible order block that could be in alignment with that could reasonably be used if price does go higher. Could reasonably be used as a possible area of support that we could use to either validate or position or use as a possible positioning tool. Right, this here was part of the model, right? Because it was SMT, like ICT has stated in one of his 2022 videos, because it was SMT there, and the nasdaq versus in the nasdaq versus the S&P, we could then trust that this is likely to continue as well. Again, things are not fully in alignment like this here, right? Like we don't want to see this rally. If it's going to go higher in the indices, we definitely don't want to see this rally. We want to see this show weakness. We'd like to see this also show weakness, and we'd like to see this rally. But again, none of that stuff is taking place, right? We could see that things have been more challenging, right? Maybe you took a loss today, maybe you didn't, right? Maybe you took a win. If you did take a win, given the circumstances that we've described here all throughout the last hour or so, couple hours, you gotta realize that it's low probability. You gotta realize that if you made money, most people did not. So you gotta take that and be happy with it, and do not overtrade ever. Let me tell you this: if you never overtrade and you just take 1 to 2 trades, that will change your entire trading. Especially if you catch yourself able to catch moves, like you catch yourself spotting multiple moves and you see them and you wish that you would have taken them. If that's where you're at and you can call bias and all these different things and you're comfortable, just add that simple fix, add that simple change, and watch how dramatic the change is. There's little simple fixes you'll notice over time, like the little tiny changes. Like you'll see that those a lot of times have a huge impact. Let's observe how this wick is either respected or not respected. The midpoint of this wick here acts as a discount array as price prints higher, if it does want to go higher. So if you go from this high to that low, you'll see also that we're at equilibrium in this small range here. And price has just been bouncing back and forth between that. So yeah, observe this wick. Observe if we stay above this 50%. Keep in mind the equal highs up here I mentioned, how those would be potentially influential. And think about it, even if you took a sell down in here and you were holding it because you just demand that you get 1,000 points, you'd be struggling right now trying to hold it. Right? We talked about the risk of price wanting to come back, right? So it's just another example. My student took this trade, as I showed you earlier, but he knows the mindset to get out. Take what price gives you and get out, right? Knowing that the day is what it is, right? As NFP weeks, FOMC weeks, rate announcement weeks, Fed speech weeks, right? Weeks or days with those things, those elements in place. You got to remember that those present low probability, and a lot of times, the day before, the day of, and the day after holidays, same thing, right? No trading at all on the day of the holiday, very minimal trading the day before and the day after, and then now that pushed us into Friday, and we can see that all the intermarket relationships are kind of skewed, right? So all of that taken into account leads us to the assumption that we are in low probability conditions. And then you set aside the fact that we have these equal highs here that weren't taken, right? It did take it a little bit, right? For me, it wasn't enough because of my rules and the way I view things. And it seems like that was justified. Because if I would have taken a trade, and if I didn't have the mindset of I'm going to take the bare minimum because I know it's low probability conditions, it's an unnecessary struggle. Unnecessary doubt that you'll bring upon yourself, right? And it's just, there's better times. So yeah. So all those elements that we've just discussed kind of give you a pretty good view of how to observe high probability versus low probability, right? It gives you at least like a baseline of understanding. So yeah, it seems like now DXY wants to follow through with what the yields are trying to portray here. So yeah, we got this fair value gap here. And make this bigger. Got this little 8-hour fair value gap. Go to the daily, we see this order block. So you can either use that fair value gap area, or you could use the midpoint of this order block as what it's basically trying to reach for, at least right now. We see that buy side's been taken. Remember what we said too in the last couple of sessions. The live sessions, I've mapped this out as a market maker buy model possibly, and we can see how now it's pretty quickly moving from this time frame. If you look at this time frame, it seems like, oh, we're pretty quickly moving. Then you go down to the lower time frame and you see that it's being reckless. Think about the perspective from this lower time frame versus the higher time frame. Whenever you're in doubt, another key element has to do with when you're in doubt in the lower time frame, you move up either a couple time frames or move up to the daily chart. And that'll give you more clarity as far as what it could possibly be reaching for if you're confused. Right? Because again, we're trying to achieve clarity. Okay? Clarity is, in my opinion, top 5, maybe number 1. If you don't have clarity, risk management's number 1, that's for sure. It doesn't matter if you have clarity. If you don't have any risk management, you're over trading, over leveraging, nothing you learn in trading is going to matter. Like if you can't protect your capital in the pursuit of getting more capital, you're not going to be able to get more capital because you won't even have an account. So all the skills that you've learned, all the time that you've poured in, it's basically getting stepped on because you cannot preserve your money. And then when you make money, how are you going to keep that money? That pertains to risk management, right? That goes back to the 1 to 2 trades a day max, and then dropping your risk if you take a loss. Like, that is critical, right? Because that helps you, for one, stay in the game, and it protects the number one rule is risk management. It amplifies that, right? It backs that up. And then all the other things fall in order. But if you don't have that one element, it doesn't matter who you learn from, what you learn, how much you can make in a windfall, right? It doesn't matter. If you can't manage your risk and keep the money you make, I forgot who said this, but I heard this. I've heard this from multiple people. But it's not about how much money you can make, because anybody could come in and make money. It's about how much money you can keep and how you keep that money, and how good you are at preserving the capital you make and the capital that's in your account. That's like the golden number one rule. If that's not a main priority, and there's a trader that's struggling that does not prioritize that, that's most likely a huge reason why. You know, going back to the example, if you saw $300 on the ground, would you pick it up or just give it away? Or just like say, no, I need more. I'm demanding more, right? That has to do with, risk management and money management. And especially if we're in a low probability condition, if you can't find it in yourself to pull away, take that small amount, although it didn't hit your full target, I'm telling you, that's like one of those things that separates the ones that can be profitable versus the ones that can't be profitable. And most of the time, it's the ones that need so much of an image online versus the ones that are calm, cool, and collected, doing this, treating this like a business. And it's not a bad thing to want to have an image. But if that affects you and it makes you so thirsty for attention that you can't even follow your rules and do things how they're supposed to be done, because this is a business at the end of the day, then it's best to not even seek that if you're actually wanting to be a trader. There's a balancing act, and it has to take place, because this industry is literally created to victimize you. It's not made for you to make money. It's not made for me and you to come here, sit on this chart, do no physical labor, but make thousands of dollars or hundreds of dollars. It's not made for that. It's made for the banks and commerce, right, to be done, mainly the banks, to go in and victimize everyone that participates while they laugh to the bank, right? You got to keep that in mind. Like I say all the time, this is a battlefield. We're at war right now. The trade I took earlier, somebody lost. Somebody that was greedy, somebody that doesn't know what they're doing probably, just paid my phone bill. Okay? Like, that's just the reality. And I want all of you guys to be on this side. So it is what it is. So yeah, we could see how things are obviously, things are, like I said, that being a possibility, being the possible idea to go higher. Here's another opportunity. It's another opportunity that was presented. It did drop down, so this is an even better opportunity. And notice how it came right to the equilibrium point and used that as a launching pad. Notice how there was S&T at the lows here, which we discovered, right between the NASDAQ and the S&P. Price shifted market structure. If you go from low to high, if you use the YouTube model rules in terms of seeking the discount fair value gap, or using like the first one to enter, but use a discount one to put your stop at, you could see how that was a beautiful opportunity as well. You could see that this also, right, the idea that I painted out. Notice how I waited. I didn't take the entry here. I waited. I wanted to see how is it going to respond to this, demanding that price speaks to me. Are you going to respect this or not? And then it showed to me that it was going to respect it, at least to try to aim for the high. Ran up, gave me 7 points, and I got out. Knowing that it's low probability conditions, knowing that I could be wrong, knowing all these things, right? But because that's the case, I saw my model. This is one of the models I use, right? Everybody should use the YouTube model, at least try, because if you don't use it for entry, you can still use it as, basically when price turns. It could be a tool like that as well. Like market maker models also have an element to them that you can use them as like a bias tool. Because if you could spot a market maker buy model, now you have the ability to phase a particular price structure. Like this here could be a market maker buy model. Consolidation, accumulation, reaccumulation, smart money reversal, first stage accumulation, right? Because price has broken past the 50% of this range that we're framing the market maker buy model on, I don't necessarily expect the second stage distribution to take place. But of course, today's special, right? It's a holiday week. Conditions are low probability. So, it may give us this retracement and then go higher. But yeah, I have a whole thing about market maker models as well if you want to go check that out. But yeah, there's multiple ways to look at things. So yeah. So yeah, I want to watch this and see this wick here. Let's observe how price is going to treat that wick. Right, so you see these lows here. This is sell side. Price dug down. Yes, it presented the model here. If we do punch above there, punch above this high, there's no fair value gap. But if there was, this is still the YouTube model rules. Run on stop, shift in market structure, return to a fair value gap, and then price delivers. So this is another continuation variation of the YouTube model. This was another continuation variation of the original YouTube model down here. So you can see there's 1, 2, 3 potential ideas. This may even be an optimal trade entry if it dug lower. This is an order block on some time frame, right? Right there. So watch how that respects. Does it respect it? If it doesn't and it blasts through here, then it's likely to not reach above here. Right? What are our 3 PD arrays? Well, we have 1 order block, 2, and then we got this fair value gap that has been used. But if it was to break through that, that's 3 PD arrays, and then this order block as well. So then that would get us away from the thought of continuing to buy. So that's the 3 PD array rule, but in a lower time frame capacity. We also just discussed the multiple areas in which the rules of the YouTube model presented themselves as a possibility for an opportunity in a continuation fashion after an original idea was presented. Right? This is a perspective that's shared across all the models. Just like how we see this is a possible market maker buy model to get us up above these equal highs, and we're on the 1 minute. You can also take that idea and use it in higher time frame scenarios, right? So there's different variations to each model. The breaker, for example, right? You can do this, have this same idea, same tactic, but instead of the YouTube model, you'd be looking for a breaker, the breaker pattern to form with the breaker rules to form. As price prints, or after it hits a higher time frame liquidity level that we can reasonably anticipate a response from. So this, I hope that small little explanation shows you why, or starts to intrigue you into understanding that you really only need one model. You can use it in multiple fashions. I don't think that specific viewpoint has been shared enough or portrayed enough by ICT. I mean, he may have, I think he has talked about it a couple of times, but it's not an obvious thing. Most people don't know that each model can be used as a continuation variation. You just have to know the rules of the model, like the overview of the model you have to understand. And then when you go into the market, if you can also understand bias, then when price is printing in a direction, you can then start to stalk those particular rules and signatures in price, and then start using those as continuation variations as well. So yeah. But those of you that have been with me since the start of this now 3-hour long live session, for one, thank you. I appreciate you spending time with me. I hope you guys have gotten value so far. And those of you that did join but didn't have a chance to stick around, if you hear this, I hope to see you again. But yeah, if you guys have any trader friends that you think can get some value from hanging out with us, definitely let them know. Send them the link to the channel, and let's get connected. So yeah, and I want you guys to know too, when you guys leave comments and questions in the chat or anything, like any of your own perspectives, I promise you that benefits other traders. Maybe there's traders that don't feel confident to speak up because of, remember the confidence conversation we had earlier, right? So you guys are actually benefiting these other traders doing, pretty much what I'm trying to do as well, by participating in asking questions and, sharing your insights and sharing your difficulties as well. So you guys are just as important as I am in this whole situation we got going on here. So yeah, it looks like hopefully we can see an impulse lower. I'm not banking too much on it, right? If we do see this impulse lower, then we'll see this have an easier chance to get up above the highs we've painted since the beginning. But yeah, like I said, you want to take, you can go from this low to this high, and we can get now, because sell side's taken, now buy side's taken here, so this becomes our new range of opportunity or dealing range near term, inside of this, obviously, this larger dealing range that delivered from the equilibrium. So we messed around in a discount for a little while, and then price has now ran away from it. So now we have price coming back down to this near-term discount. So let's study how it behaves around there. See, if we were extremely bullish and it was really one-sided, the midpoint of this wick would have shown to be important. Right now, I mean, just the delivery is high resistance. You can feel it. Like things are just not willing to move one-sided. So not only is it low probability conditions, given what we've discussed pretty much all morning, that low probability condition that we observed is also overlapped or overlaying the high resistance condition. And we can kind of see what that all looks like and how it has behaved, right? Note how you feel as you've been watching what's been happening. It feels just like you're stuck in the mud. Some things have been quick. Some of the ideas, like this one I said earlier, and then this one that I painted out, I said this is probably going to rally, right? Given the fact that we have all the rules in place for the YouTube model to go higher. Although that did go against what the DXY was doing. It also has went against what the bonds and yields have been doing, right? So everything's been skewed, but I just have banked on the fact that they don't like leaving super obvious things like this. Now, if they would have ran this aggressively and didn't leave these like this early on, we would have probably had a much stronger scenario to the downside, right? But they didn't. They do this on purpose. Because anybody that tried to sell in here, like we talked about earlier, they're getting victimized now. They're in full regret. Damn, I should have taken profit at the lows. Like just imagine the psychology of these people that didn't get in and get out like my student did earlier. Just imagine. Like they're probably in struggle mode right now. Like full on regret, upset. Probably didn't even realize that we're still inside of the higher time frame bullish trend, inside of that larger time frame fair value gap. That's what these two lines are. It's that daily fair value gap we pointed out. I mean, you can see the midpoint of that fair value gap is here too. Kind of see how price delivered through to and through it. But yeah, nonetheless, it feels like you're stuck in the mud. At least that's my observation. If I was in the trade still, it would feel like we're stuck in the mud. But the NASDAQ had a quicker move. Kind of funny observation here is that the NASDAQ made the lower low, which is supposed to present us with the fact that NASDAQ should be heavier than the S&P that made the higher low, given the S&T observation. But clearly, right, price decided to give it a quick response, a quicker response than the S&P and the NASDAQ. But nonetheless, look, run on stops, shift in market structure, fair value gap, aim for the high, equal highs. On the way to attacking these highs. Now, do I need these highs up here, the max highs, to be profitable if this was my entry? No. Right? Given the conditions, you would force yourself to take this profit if you're following the rules, right? The circumstantial rules and, just the baseline rules of discipline. So now prices retracing. We have this as an order block, but we have DXY continuing the strength. Right? We see that the yields are still trying to rally. We see that the bonds look like they're trying to reach down to the fair value gap down here. If price reaches down to this fair value gap, does that change our whole bias on the bonds? Absolutely not. We need a whole lot more than that. We need price to damn near break down to here. And once that happens, then okay, things have possibly changed. We consider things may have changed, right? But price, in my opinion, we've been consolidating, building up liquidity, both buy side and sell side. If it's going to continue being bullish, say going into next week, if they push down to here through the session, and they hit this fair value gap, and stay there going into next week, it's pretty probable that they're going to try to come up and reach up into here. Because imagine, they've built up liquidity now. We're in a bullish market. They've been building up liquidity. Same with over here. They've been building liquidity. We're in a bearish market. Right? So if they bounce up to here, if you take this high to that low, this fair value gap, just eyeballing it, it's in a premium. So remember, the psychology behind smart money is they want to engineer losers, position themselves where the losers are at, then attack or victimize the opposing side that they're actually targeting. Smart money they're holding and building positions all throughout here, right? And then they manipulate against that, take out the stops where people think it's supposedly strong resistance, where they've built a ton of liquidity, and then they run up to a premium or fair value, hence the term fair value gap, right? Then they position themselves opposed to what most people would probably believe if they're on the 1 minute, and then they victimize, then offload positions at a logical discount area. In this case, this is a 3-day fair value gap below equal lows, right? So yeah, I hope that stuff makes sense. You gotta always consider thinking this way. And we have equal highs up here too. Like I said, they don't like to leave those types of scenarios in play. They really don't. So in line with this, with price still being bullish, it doesn't hurt anything for them to come down, sweep out these equal lows. This is also a bullish order block on the 2-day. In line with the fair value gap, if you go from this low to that high, this fair value gap is then at a discount. So then them positioning here to attack here just makes logical sense if you think about it from the terms of what we've been discussing. Hopefully it makes sense to you guys. Yeah, DXY is just like slow grind up to this. I think is that a fair value gap? I think it's a fair value gap right there. Oh, it's the midpoint of the daily order block. So yeah, it seems like that's where they're going to want to reach for. And it looks like the assumption that we've had from the very beginning, that I've told you guys to be aware of, seems to be in fact taking place. Notice how what I said about the YouTube model being presented to continue going higher. So I mapped out 1, 2, 3 ideas. I participated in one, followed my rules, and haven't taken another trade, but pointed out 2 extra ideas that, like at this point, have now played out. All have reached above 5 points, including the one that I myself took, obviously. Mind you, all from the basis of the YouTube model continuation variation. Not mixing in any other models. I mean, I did mention the market maker buy model, which clearly seems like it's going to come to fruition as well. High risk. We talked about high probability, low probability, why it's low probability and high resistance today. And just many, many things. Let me see. We can see too how like the day pretty much started as a bearish power 3, right? So it opened here, the open price rallied up above the open price. London session created the YouTube model here. Well, technically the YouTube model was right there as well, but a conservative entry would be right there. Price dropped in the London session, reached all the way down. I believe it took the previous day's low as well. And now, price is reaching up for those equal highs that I said were suspect. That would likely be a problem. And mind you, even if this does not get fully above these highs, all of this price delivery that we see here visually shows you why I pointed this out when I did and did not trust the sells. There was a sell. You saw that my student entered and took it down all the way to the low, showing independent thinking like we discussed as well. We discussed that a lot in this call. And then, price came back. I assumed that this was going to initiate the move, right? Because it created the YouTube model, respected the inversion fair value gap here. Use that as support, right? Price then gave us 2 more opportunities, high risk. This one's in a premium, right? Based on this, here, let me remove this real quick. This idea here is at a premium, given the range of opportunity from this high to that low. So you can see how this came back to a discount, or the equilibrium. can see how when it came down to that, price ended up rejecting from there. It was a pretty decent move. But now that price is at a premium level, above equilibrium in the range that we're navigating, it's going to be a little bit more difficult, right? Because now you're buying at a premium. You're buying something that's expensive, right? In a low probability condition, in a high resistance condition, on a Friday, after a holiday, right? So these are all just things that I want to remind you guys of and kind of let you know, like, when you see an opportunity to deliver, yes, there's these continuation variations, but if you're buying, as you go further into a premium, the probabilities start to fall off and get less probable and more high probability that there's going to be a retracement on you. And if you're going to try to rush or stop, keep it really small, you may be risking yourself of getting stopped out and taking just a bad trade, right? So just one of those things to consider. Oh, one thing we didn't look at today, let's actually go look at that actually. One thing we did not look at today to further confirm in terms of intermarket relationships for a particular bias, one thing we didn't look at was these bad boys. Oh yeah, we've been calling this the currency's lower as well, and that's been fulfilled too. So yeah, everything is in alignment with indices continuing to go lower and DXY to go higher, right? Things are in alignment with that particular perspective kicking into play. But again, the currencies are showing that. There's other things showing that, but the S&P and the NASDAQ are not quite there yet. They still have not fully given us like more evidence that it's going to be time for that. It has done a retracement, right? So in terms of validating this being a retracement and sentiment across the board showing that price could go lower and promote this retracement, which we've been in front of, it's definitely valid, and we've been able to participate. But again, I need 3 PD arrays to break in order for me to completely change my bias, or narrative, I should say. Right? I like to say bias for like day-to-day behavior, right? And narrative is kind of what is dictating the story in terms of why that bias is going to be true. What's the narrative? It's reaching for a particular PD array, a particular mode of delivery. And the bias on a day-to-day basis can sometimes be a trend going with the overall narrative, right? Going in the direction of the narrative. Or the bias can be assisting in setting up the narrative. Like if we're bullish, right? The bias could be going lower inside of the bullish narrative going higher, right? Reaching for a particular level. But price shifts sometimes between bullish and bearishness as price is going higher or lower, right? And sometimes, in a bullish trend, it's going to be bearish, right? So the narrative has to do with what it's reaching for. What is it doing? Why is it retracing? Well, the narrative may be that it's going to continue to go higher. We're just, retracing with a bearish bias for short term to then kick back into the bullish narrative, reaching for maybe the highs or some type of PD array above the high, or whatever the scenario could entail. And the whole narrative changes when our validation, invalidation points get disrespected. But we're able to navigate all throughout the trend, all throughout the change of the trend, because we understand day-to-day liquidity navigation. We understand the narrative and the process of identifying that narrative, what validates, invalidates that narrative, the bias day-to-day, is it trending, retracing? Like, why is it going to do one of those things? Right? So let's go back to the lower time frame. All right, so now we've got a punch in the face to anybody that was trying to hold buys. So yeah, very interesting how they're continuing to build up that liquidity above here, leaving these equal highs. You can clearly see that they're manipulating. Like, they're manipulating people, thinking that, oh, it's bullish on the higher time frame, it's going higher, it's going to never stop. And it's giving them what they want to see. Yeah, it's going to go. And it's stopping just short. Think about all the people that are building the idea that this is strong resistance. Right? Across the board, across the indices. Right? Well, the Dow, this is vicious. Like, the Dow looks like it's going to war with everybody. Definitely a different beast, that's for sure. And so yeah, this whole market maker buy model framework seems like it's beautifully been delivered. So again, if this is going to continue, if we are going to keep pushing, which it looks like it's going to, I would love to continue to see this rally higher, and then see this. I wish it would have reached into this fair value gap, because then that would have been like, oh yeah, for certain it's going to turn around and go lower, and then we're going to for certain see the indices turn and continue to start attacking sell side. But again, we just have to wait, right? To change your overall narrative, it takes a good amount. Now, bias changes from day to day, right? It could be a retracement, it could be a trend, it could be a retracement to continue the trend, right? Or it can, completely change. But again, the overall narrative changes when more things occur, from intermarket relationships to 3 PD arrays being broken, fundamentals in alignment with that change, maybe COT showing some type of change in that analysis. Maybe we're changing quarters, we're switching quarters, right? We're in the third quarter now, right? So if this does change and go lower, and things start to present themselves in a capacity where we think it's going to continue to drop from here, you're witnessing a quarterly shift, right? If that does take place, right? So you'd want to take that and observe everything you can, from the fundamental analysis you use to the intermarket relationships. View what has changed, right? What have other assets done in terms of risk on, risk off that could have also led you to trust and believe that this is going to change directions into the new quarter. And these are the boring things, right? Like these are the things that people hear people talk about, and then they just won't go do it because I don't need that. I just want to make money. When these are what makes you trust that you will make money, so that you're not so doubtful, so you're not so worried that this isn't going to work, that you're not going to be able to do this. I mean, think about if people went into becoming a doctor. Think about if they went into that with the same mindset that they have with trading. Oh, I just want to make money, so I'm just going to learn the terms. I think that's enough. Like what? Like, you got to do some of the boring things so you could become a professional. So then you can make the big money. It's the same with trading, right? Like, there's boring things that are valuable. And you can make them fun. Challenge yourself. Gamify things. Like, I don't know. You got to get creative, right? Because breaking through the boring times, the hard times, on the other side of those things is is the whole reason why you started trading in the first place. The lifestyle, all these different things, right? Like, you want to be able to sit at home, not depend on nobody, be able to make money from the computer, and be proud of your skill set, right? And be proud of the fact that you're doing something that most people can't do. The only way you achieve that is by going through the fire that we all have to be put through. And I'll tell you one thing, you're going to always learn. If you stop learning about technicals, you're going to continue to have things that you have to learn about yourself to continue to have the right performance, the good performance, how to bounce back from bad performances, how to mitigate or make it so bad, like super bad performances don't happen. All that has to do with building a structure of rules that prevent you from doing super damage to yourself. So yeah. So yeah, let's go see. So we got like a little bit of this for value gap down there too. See, I don't like this. I hate when it does this. like it's one of those things, right? Like, oh, left equal highs. Oh, great. Well, it's selling off. Probably not gonna trust that. And then it takes off, right? Of course, this happens all the time, right? Like, it'll leave equal highs like that. But you know what else happens all the time? Better opportunities, right? Better conditions, more trustworthy conditions. Those happen all the time too. And it's less risky. Always has risk, obviously, and I'm not a financial advisor, but we look for the best shot, like a sniper. We're not running into the battlefield with a machine gun and just letting off 100 rounds and spraying and praying, right? Like, we're calculated, very repetitive, repeatable process, and you become a better person in the process for the most part. But yeah, guys, I think I'm gonna call it a day. We have definitely talked about a lot, discussed a lot, so I hope you guys got value from all the things we've discussed today. Consider some of the things I've talked about. Maybe rewatch. I know it's a long video, long stream, but if there was something that you remember from the video but you want to re-listen to, maybe you could just leave me a comment, right? And then maybe I could make particular videos about those specific topics you found interest in. Because remember, this is all about you guys. This isn't about what I want to do. This is about what I can do to help you and serve you guys the best. So yeah, I hope you guys got value. I appreciate all you guys that have stuck with me the whole time, and yeah, let me think about. Thought there was something else was gonna be brought up right now. It just flew out of my head. But yeah, if I remember what I was gonna say, I'll probably go live again. But yeah, guys, thank you again for spending time with me, and let me know in the comments if you have questions, and I will see y'all in the next one.